Good morning, everybody. It is Wednesday, October 2nd, 8:45 a.m. We are back once again on another episode of the Market Open, and we are officially in the second day of October. First day of October was pretty crazy, and we got a lot of stuff to talk about in terms of what happened on the first day. I don't think any of us expected the port strikes. Well, we've kind of found out, I think, September 30th. At least I did, that there was even a thing called port strikes that were happening. So that started happening, and that obviously had the ramifications that it had. It is still going. We have no negotiations yet that have led to a deal, hopefully by the end of this week, but so far that hasn't happened. And then second, we had Iran launch some ballistic missiles against Israel, and that obviously created headlines that not only spooked Bitcoin falling from about 65,000 all the way to 61, although there was a little bit of a recovery last night, which we'll talk about, which is, it was a decent recovery, not an amazing recovery, but there was some upside to the asset class. And then obviously broader equity markets also fell based on that headline. If we take a look at what's going on in the pre-markets right now, thank you everybody for being here today. We do have Tesla deliveries coming up, I think, in like 20 minutes. So that's going to be a big market mover, at least for Tesla. We'll see what happens there. We got a red pre-market, nothing super red, but we are indeed red, 568 on the S&P 500. Again, we were 575 yesterday in the pre-markets. Then the Iran headline came out at 9:45 a.m., and that's what led to a little bit of a downside of volatility. I think we hit 566 on the lows. Palantir, 36.39. Our boy Peter Thiel, once again, did sell some more shares. I'm laughing about it because it's just like he's selling a lot, dude. It's just objectively acknowledge he is selling a lot of shares. And yesterday he sold another 4 million. How much was it? It was 4.2 million. So another $157 million worth. He has sold $700 million of Palantir. Really, again, stock didn't budge. I mean, it went down 2% yesterday, but I don't think it went down 2% because Peter Thiel sold. I think it went down 2% because, there was a lot of macro instability in regards to the Iran-Israel headlines. We'll see how the stock reacts today, but Peter Thiel has officially sold $700 million worth of Palantir stock in the past week. Again, my thoughts on this are very simple. Although it is a large amount, I think that the market is developing its own narrative for Palantir that is independent of insider sales. Maybe that narrative will catch up to it and insider sales will become a problem. But if insider sales haven't been a problem for the past 3 weeks, I don't know if it's going to start randomly becoming a problem tomorrow or today. So we'll see how that plays out. But Peter Thiel did sell some more shares of Palantir. You got Nike right here down about 7%. Why is Nike down 7%? Well, they are not giving guidance anymore for the full year, and they postponed their investor day, and they missed on revenue. It was a slight miss on revenue, a beat on EPS. I think the beat on EPS probably is because of share buybacks, though. And investors are a little upset about the lack of an investor day and a lack of exposure into guidance for the company. But I think they're doing it to set up the CEO to be in a good situation. And so that's kind of why they're playing that out. And then last thing in the pre-markets, and then we'll get into a bunch of different segments. We've got Alibaba up 4% to FXI, the China large cap ETF. This sucker is up another 7% in the pre-markets. At this point, it's up almost 40% over the past couple weeks. China's doing China things. China is doing China things. It doesn't seem like China's slowing down with the stimulus. We talked about yesterday all the different things that are happening in China in terms of M2 money supply, residential and commercial properties, etc., that are all at a decade or 2-decade lows. And if China's getting really ready to stimulate, and this isn't just like a one-off thing, there's probably going to be more stimulus coming. And if that more stimulus comes, that'll probably be good for China. All right. Got a lot of stuff to talk about. Thank you, everybody, for being here today. Let's get into the show. Jose, what's up? What are estimate expectations for Tesla? Estimates are 460, if I'm not wrong. If you go up by if we go past 460, I think that's bullish. If we get to 470, I think that's really bullish. 450 to me is still bullish, but if we go below 450, that's not the best. I think we hit 453 last quarter. Remember the first quarter of 2024, we hit 385. So first quarter was bad. Second quarter was okay. Third quarter, I think 460 will be good. And if we get 460, then hopefully that is decent for the stock. Is it priced in? I don't know. I mean, you could argue it might be a little priced in, but I still think there'll be a move if we get that momentum. Blake, Top Dasher, Dylan, Autumn Sold, Edwin, Honeybee, Arnie, what's up in the chat? Thank you for being here today. Arnie says, I thought Bitcoin was supposed to be a safe haven. I thought so too. I thought so too. Jared, Scott, Andy, General, Tortoise from Tom from Massachusetts. Thank you again for being here, just so I can say your name. It always makes me happy to say that name. Chad, Dexter, Jed, what's up? What's up? Samir, how do we feel about World War III? I don't think it's happening because of this Iran-Israel stuff. Now, look, just to quickly say, Israel will retaliate. And then the question is going to be, how bad do they retaliate? Do they target do they end up killing civilians? I don't think they're going to target civilians, but do they end up killing civilians if they retaliate? And if that's the case, then does Iran go back even harder? And does Iran actually because usually what happens is one side attacks, they let the other side attack back, and then they take it on the chin because they're like, all right, whatever. Like, we both showed off how big, our missiles were, and now we move on. If Iran attacks back after this one, and it's worse than the one we just had, which Israel said there was only one casualty from the attacks that happened yesterday. So it was really kind of like a show for them versus actually hurting a lot of people. And then Israel attacks again after Iran retaliates from Israel's retaliation. If that happens soon, which Israel has said they're going to retaliate, then yeah, that could break out into a little bit of a regional war. Historically, that has not happened. So we'll see if that happens this time. But if that doesn't happen, then I think this likely doesn't lead to some type of World War III. Dexter, what's up? FIFA, Brian, the delivery time I think is in about 15 minutes. I think it's like 9:05. Can someone confirm in the chat? It's either 9:05 or 9:15, but we're going to get the deliveries pretty soon. So either 9:05 or 9:15. I don't think it's at 10 a.m. I'm pretty sure it's in the next 20 minutes. Midwest, Adam, Christopher, good morning. Good morning. Thank you, everybody, for being here today. All right, let's start off with Tom Lee. We just had Tom Lee on CNBC. Let's get his thoughts on what's going on in the market, and then we'll go further into all the other topics that we have today. Here we go. Let's start off with Tom Lee.
Back with us for his latest musings on the markets. It's managing partner, head of research at Fundstrat Global Advisors, as well as a CNBC contributor. People forget, I think, but your outlook and views are always nuanced to some extent, Tom. So last time you were on, after being pretty bullish on small caps through the end of the year, I wouldn't say you didn't change that long-term view, but you did express some near-term caution. And these people want to know, the people that follow you, the people that watch Squawk Box, they want to know exactly what to do every minute of every day. So it looked to them like you had waffled on your long-term view. And you're going to say the same thing today. I think near term, you acknowledge that there could be some bumpiness, choppiness, but by the end of the year, you think 6,000 on the S&P.
That's right. I think we're still in the midst of a very tricky period because we've got the election in less than 35 days. And now we've got two things that investors don't know how to discount. One is, mounting tensions in the Middle East, and then a port strike that is potentially going to cripple the economy. And so I think that as investors worry about this, if we get a dip and a big dip, I think you still want to buy that dip because the setup into year end has a lot of tailwinds.
The worst case scenario for the port situation is something that we've seen. And we shut down an economy already, and that was probably a time to buy. We know that. So we've seen that movie before. Could it be? I can't imagine it could be as bad as the pandemic, but we have shut down an economy before.
Yeah, that's right. So I think it creates headline risk because, the longer this strike lasts, there'll be companies that miss. And so S&P earnings might get downgraded or some stocks might miss results. But that's all just temporary. I mean, those are just short-term headwinds because it doesn't change the long-term outlook.
It's very strange that I don't remember any war that lasts, that where the effects, and we've been through quite a few back in the 90s and in the 2000s. It never seemed to have as negative an effect on the overall markets as we thought at the beginning of each.
That's right. In fact, if we look at the last 6 sort of global wars or tensions, you almost always buy the invasion. The exception was 2022 with the Russia-Ukraine war.
So Tom Lee's saying, hey, the Iran-Israel headlines yesterday, that's a buy the dip, which again, historically has always been a buy the dip on war headlines, which is why the market tends to recover very quickly. Yesterday, recovered not fully, but pretty quickly after the headlines were gone. However, the Russia-Ukraine stuff, that was not the best headline because we were getting into a rate cutting cycle or rate hiking cycle.
Because we were also in the midst of a Fed tightening cycle. So that was not a buy the invasion event. But the other times you did want to buy.
Both Iraq wars.
Yep, both Iraq and
Was the
So, I mean, this
market,
could be the
where
same.
was the market before that happened? Had levels come down, or were they trading at near highs or at highs?
Yes, this is different because we are hovering near highs and we're in an extended market.
And things aren't cheap in terms of multiples.
That's right. But at the same time, we also know there is a lot of cash on the sidelines,
Right.
because margin debt hasn't risen for 4 months. I mean, that's pretty unusual with a rising stock market. And now money market cash has actually been rising at a time when the Fed is cutting. So I do think there's firepower.
The other issue, just the longshoreman strike, if that goes on for an extended period of time, is that something? We were talking before how much that cuts off the GDP. If it's there for a week, maybe cuts 0.3 of the GDP.
Yeah.
For every week they're out. Is that something that the Fed comes in with much more aggressive cuts and that fixes things, or are there inflationary factors that also come into play and that ties their hands?
I mean, the Fed has to kind of put that in their calculus because the labor market has also softened. So if this is a shock in a way that causes the labor market to weaken, the Fed's going to be a lot more dovish. But we get the payrolls report Friday, and I'd say maybe it sort of early hints seem like it's actually going to be a better than expected report.
But then you also add in what would happen from inflationary pressures, not only from the longshoreman strike, but potentially from oil prices going up in the Middle East too.
Yeah, that's right. I think the Fed at this point would be more concerned if the consumer expectations got unanchored on inflation, and those have actually been improving. So I think the Fed can be less worried about the inflation side of
Did
it.
you see
All right, so that is Tom Lee's take. I think his take is relatively bullish. The same argument he's been making for the past couple of weeks, which is that, hey, you should expect a little bit of volatility, even though the markets are doing well, given we're at all-time highs, and we already got a taste of that volatility in the first day of October. By the way, I forgot this news came out, and this is pretty damn bullish. I'm surprised the market's really not ripping on this news, or at least getting a little bit higher. Look at this, folks. Private businesses in the United States added 143,000 jobs in September of 2024. This came out 20 minutes ago, the most in 3 months and above estimates of 120,000 jobs. Now, again, we are going to get the actual full employment report on Friday, and I'll be live at 8:20 a.m. I'll be live early to cover that. But this is still bullish. And I think, Goldman Sachs said, hey, we're probably going to add 140 to 160,000 jobs. If we added 143,000 in the private payrolls, when you combine that with the public payrolls, with the government jobs, you might get closer to 150. At least 140, in my opinion. Maybe we push 160. Now, the only bearish argument, we got 2 minutes until Tesla delivery numbers as well. The only bearish argument for that is that means we're not going to cut rates because we are adding so many jobs. The economy is doing so well. There's no reason to cut. I am sympathetic to that, but Jay Powell actually already dealt with that problem when he said that we are going to do 25 and 25. So Jay Powell kind of already made it clear, yeah, we're probably going to do 25 and 25. We don't need 250 again, which we definitely need to cut. I mean, there's no world where I think we don't need to cut at all. But if we're only doing 25 and 25, then we're good to go. It doesn't need to be this like, oh my God, there's no need to cut because inflation will reaccelerate because jobs are so plentiful in the United States. So if that's the case, that's a good number. That's not a bad number at all. Benny says market's not going to react with this much uncertainty. That's true. I mean, the port strike is still happening. The Middle Eastern headlines are still there. Let's check the price of oil. We should get Tesla numbers in a couple seconds. Oil is up 2.82% on the day. That's not good. Again, I'm getting kind of greedy wanting oil at 65, but we had oil at 65 for like 20 minutes yesterday, and I got so happy. But 2.8% on oil, 71.80. Still below 75, which is good. Not the worst thing for CPI, but hopefully if the Iran-Israel headlines calm down, that oil number can come back down into the 67, 68 range, which would be just great for the economy. But it is up on the second day of October because of those headlines. So yeah, again, those job numbers are good. I mean, for a lot of people that were concerned about recession based on the idea that we would have massive unemployment, those job numbers, I mean, maybe you don't believe them, but if you believe the private payrolls added 143,000, that's not necessarily screaming recession, at least not right now. All right, Tesla is down. Tesla goes down. 1.4, 1.5. We are down. Tesla, there's that red candle. 1.5%, 1.7, 253. Let's get the numbers. Let me see. What are these numbers? Why is it down? Not on their website yet. Not on their website yet. We should be getting it very soon. But now it's recovering a little bit. Now it's recovering. A little bit of a head fake. Numbers should be out. Let me see. Still don't have it yet. Maybe that was a premature move. Not on their website. No one has it yet. No one has it yet. Amit, did you watch the debate? I watched 20 minutes of it. I got bored, and then I started watching Halloween Town on Disney Plus. Disney Plus is relevant to me every October because Halloween Town. By the way, you guys say I don't watch movies. That's a top 10 movie of all time. Yeah, I'll fight anyone on that top 10 movie of all time. I don't have the numbers. I don't have the numbers, guys. I don't see it. I still don't see it. It's not on their website. No one has it on X. No one has no one has the numbers. So this move is maybe this is Bloomberg Terminal has the numbers, which probably they do, and no one else has it yet. And they're reacting, but not seeing the numbers. It is down though, down 1.4. I mean, that's not a really aggressive down, but it's not an immediate reaction to the upside, which leads me to think maybe it's right at 460 or slightly below 460. We got it. 462. 462. That's not bad. I mean, that's not horrible. That's not bad. 462,890 deliveries in Q3. 6.9 gigawatts of energy storage products. I think that's their most ever in a quarter, if I'm not wrong. And then production, they did 469,000. That's not horrible. The street was expecting, 464-ish? The street was expecting 463,900. They came in at 462,890. Okay, so they missed by 1,000 cars. I mean, come on. That's not something... If this was like 450 or 453, I would understand. All right, that's a little... that's a big miss. This is a 1,000 car miss. Should not be punished that aggressively. Look, 462 is not horrible. They produced basically 470,000 cars. I was expecting 450 to be on. I wasn't even expecting the 460s. So 450, 460 plus is not bad. It's not bad at all. 462,890. The stock is down 2% on this news. So the street doesn't love it, but I don't think the street should be hating it either. 2%. I mean, it feels like a kind of normal reaction. If it was down 7 or 8%, that would be worse, but that's not the worst thing in the world right here. There were some bulls expecting 470, so maybe some got disappointed. Yeah, maybe. Garcia, what's up? Good morning, y'all. Let's buy this Tesla dip. I guess we'll see when it opens how bad this dip gets. 2.5, I kind of feel like, I don't know, dude. I kind of feel like it doesn't have to get to 5 or 6% down. This is not an aggressive miss. They missed by 1,000 cars. I guess you had some people really expecting 470, and maybe that's a miss to them, but 262 versus 263. It's just not that big of a deal. We got 1010 next week, folks. A lot of people got invited to. I got a lot of messages from people yesterday saying they got these emails. Apparently, Tesla sent out a ton of invitations yesterday to people, and the event's coming up. But the event's going to be pretty exciting. Hopefully, it's not a sell the news, and if it's not the sell the news, then I think that's what people are going to be excited about. Are we buying the hood dip? I bought the hood dip yesterday at 22.40. I'll buy again if it goes below 22. Yeah, I think 22.50 and below is bullish for hood. So to simplify my thoughts, 22.50 and below is pretty bullish for hood, and I'm personally buying that dip. Down 2.1%. I feel like the street's not letting it go down that much more because they still like the number, but they also don't love it, which is why they're not buying it right now. But this is I don't know. This is not the best reaction to me. I think CNBC has some coverage. Let's go to them and see what they have to say.
We have it, Carl, and sometimes those numbers are pretty darn close to the estimate. Tesla delivering 462,890 vehicles in the third quarter. The estimate on the street was for 462,000. So we're not going to see a whole lot of reaction in Tesla shares today. This is the first time since the fourth quarter that Tesla posted a positive year-over-year gain or an increase, I should say, in sales. Last year, they're roughly in line with where they were in terms of total deliveries. But this is the number that people were expecting, 462,890, producing 470,000 vehicles in the fourth quarter, or excuse me, in the third quarter. And we also have the date for when Tesla will report its Q3 numbers, which is on the 23rd after the bell. So again, Tesla coming in as expected.
Okay, I'll be back from India for Tesla earnings. Perfect. I thought it was going to happen while I was in India, so I will be able to cover Tesla earnings October 23rd. There we go.
462,890 vehicles, just a smidge more than the street was expecting. Guys, I'll send it back to you.
Hey, Phil, I'm going to bring you into the conversation we were just having because Jim was bringing up the idea, at what point does the increasing number of EVs actually start to affect the demand for gasoline? I don't know when we get to that point. I mean, we're still very low percentages, aren't we, in terms of ownership
we're not
worldwide?
There. We're not there,
We're
David.
not, right? Yeah.
Yeah, worldwide, I mean, you definitely are seeing the growth in China certainly impacting the demand for ICE vehicles in that market, which is the largest market in the world in terms of vehicle sales. But we're not seeing it definitely here in the United States. In terms of vehicles sold, it's going to be about 9% relative to the rest of the market. ICE is still about 79, 80%, and then hybrids coming in at about 11 or 12%. So you're seeing the slow erosion in the ICE market, but definitely not to the point where you can say EVs are telling people, look, you don't need to buy an ICE vehicle, and therefore gasoline demand is dropping.
Well, Phil, Jim, is this the last thing that happens before we?
So was the energy down year over year? I'm seeing energy's up 73% year over year, but is it below expectations? Energy is up 73% year over year, which is not bad at all. Again, consensus on deliveries was 463.3. They came in at 462.8. Earnings October 23rd. Energy 6.9 gigawatts. That's up 73% year over year. Unless the street wanted like 7.5 gigawatts, I feel like energy is also not doing too bad either. Oh, it's down quarter over quarter. What was the second quarter? I can't find that one. Second quarter energy. Hold on. I have it. Second quarter energy was, it was 9.4. Huh. That's why. That actually might be the reason, right? Energy might be I mean, I don't know how much the street cares about energy because it's just such a small part of their overall revenues. Energy is still growing triple digits. I think it still will grow triple digits in Q3 earnings. But that is down. Yeah, that's down quarter over quarter. Tesla now down 3%. I don't know, dude. This isn't a bad number or a bad set of numbers. So this to me is not one of those things where if I had Tesla going into 1010, I'd be scared about. I'd be more scared 1010 they don't announce something that's like super solid and then it sells off versus like this being the sell off. Yeah, now it's in the 240s. The closer we get to the event, the more I think they actually are going to announce something like legit. And if they do, then I think it's going to be really exciting. Q3 Model 3 and Y deliveries were 439,000. Q3 production, again, 469,000. Other model deliveries was 22,000. So they basically delivered 22,000 Cybertrucks, around 22,000 Cybertrucks, along with a couple other models in Q3. All right. Well, that's what you got in the context of Tesla. Now, look, I think we got to remember it absolutely had a run since the bottom. I mean, it's up almost 75% from the bottom at 130 this year. So Tesla has had a run. It's not like super green year to date, but it's had a hell of a run. And if you DCA at any time from like call it March to May, you're doing decent on the shares. Tesla now down almost 4%, 248. It is just going to be a question of what this 1010 event entails and how the market ultimately perceives it. Palantir right here down about 0.63%. We did get another partnership with Palantir this morning, a smaller one. Let me pull that one up and take a look at that. But that's what we have in the context of Tesla. All right, there you go. That's what we got for Tesla. Yeah, so Arnie, shout out to Arnie. He posted this today. Palantir and Edge Scale AI are proud to introduce Live Edge. This is a new solution that extends cloud-native AI to the physical edge, addressing key challenges in industries like manufacturing, healthcare, and automotive. And apparently, this is going to be something that's integrated with Apollo and AIP. So Live Edge equals Palantir's AIP, Apollo, SIP, plus EdgeScale's virtual connected edge. Internet of Things, including physical things, could reach over 12 trillion by 2030. Expanding their TAM. I have to go deeper into this. They put out a blog right here, so I'll be reading this blog in a little bit and trying to get a deeper understanding of this. But it seems like this partnership is a more technological partnership versus just a business partnership to introduce more edge scale AI to different users. Now, Palantir started working on Edge AI a while ago. AI at the Edge, Meta Constellation. I know a lot of people know that product. That product is uniquely based on Edge AI, and it's one of the most, outside of like full self-driving, it's one of the most interesting products that uses AI at the edge that doesn't have to like communicate with some cloud to be able to do tasks. And I think that definitely is the future in terms of how AI is going to be, for example, even on our devices, like on the phone itself, kind of getting computational results versus having to go to a cloud to then give us like an LLM-based answer. But for that partnership, we'll kind of go deeper and see if that partnership has any business implications as well. But that is one of the partnerships we got from Palantir. What do you think Palantir will be by end of year? My price target is still 35. I've had a $35 price target since Q2. I think if we have a really strong, good Q3 earnings, that can definitely go higher. But now it's based on, what it looks like for Q3. Let's finish up a little bit of the Tesla coverage, and then we'll keep going from there.
Spread all over the world, but in geo-fenced areas. And how much clarity does he give us in terms of the growth that he expects? That's what people are focused on. And then second to that is also, do they tell us, look, in the meantime, we're also going to be focused on delivering a lower priced vehicle to the market? There is no doubt that when you look at the demand for the Model 3 or the Model Y, the reason those are so strong, so successful is because of the pricing that they come at. That's where the market in EVs is headed, lower priced vehicles. So if he comes out and he says, look, we're going to come out with something even lower priced and can give us some clarity there, I wouldn't be surprised if you see the shares move higher. But the details on Robotaxi, that's what people are focused on.
Yeah, well, the Cybertruck, was that just a big mistake and a big waste of time in terms of getting them to that lower cost vehicle?
What type of question is that? Was the Cybertruck a waste of time? What type of question is that, dude?
David,
I know, but
Numbers are
growing.
Numbers are good. Numbers are good. Phil's right. Numbers are good for the Cyber.
They're not huge at this point, David. Are they as big as the Model 3 and the Model Y? No. But they are growing production and growing deliveries. And look, you see them more and more when you're out, driving around. I see them more and more, and not just in the areas where you expect to see them, where there's heavy EV adoption, but in areas where you don't expect to see them, you start to see them a little bit more. I wouldn't call it a failure. Look, did they zig while the market zagged in terms of looking for a lower price vehicle? Absolutely. And that's why Elon Musk did a 180 in the first quarter, and he said, we got to come out with a lower priced vehicle. And that's what they're going to be expected to announce at the Q3 results.
Well, Phil,
just
to go back on the Cybertruck, they did pass the Mustang Mach-E sales in the month of July.
Yeah, they're growing, Jim. They're growing. And look, I understand people will sit there and say, it's never going to be as big as the Model 3 and Model Y. It was never going to be as big as those. And who knows where they ultimately get to. They've targeted 250,000 a year. I don't know. Do I think they get to 250? Hard to tell at this point. But clearly, they are growing their production and their sales.
Phil, appreciate that.
I don't think Cybertruck's a failure, okay? I get it probably doesn't add as much revenue as some of the other cars could add to Tesla, or what a $25,000 car would add to Tesla's bottom line. But I like it, dude. It looks pretty. I see all of them in New Jersey. I want to get one of those. Like, it's not a failure to me. It looks pretty damn cool. Look, there's a legitimate argument you can make that maybe the Cybertruck was not the best focus they needed to have versus making a car that can compete with like a Toyota Corolla or a Honda Civic or whatever. But I do think that Cybertruck is going to compound more momentum in the context of their long-term vision. And at the end of the day, I mean, look, here's the thing. Let's say they went all in on this like $25,000 car. We all know, and Elon specifically said on the last 2 calls, that we are in somewhat of an EV winter in the context of people are going to hybrids and people just don't care that much about EVs. That's not me saying it. That's not an opinion. That is Elon Musk himself, the leader of the EV revolution, saying, yeah, like people are not buying as many EVs as we thought they would be buying a couple years ago. Remember, Tesla had hyper growth for a couple years. That's where the stock like 10x from 2019 to 2021. And then that hypergrowth kind of fell off a cliff. Now you can argue that rates were raised. Yes, that's true. But Tesla's been giving 0% APR for a variety of different promotions. It has not massively increased, millions and millions of cars per quarter in terms of delivery. So I think the reason I'm bringing this up is because the pivot to FSD and autonomy and rides, Elon has made it pretty damn clear via his tweets and his messages over the past couple of months that is the trajectory of how Tesla becomes a multi-trillion-dollar company. And if people don't want to literally own an EV, but they'd rather have a ride inside of an EV, a ride that is based on self-driving, then that's your Tesla thesis. You either believe in that thesis or you don't. I mean, it's that simple. You either believe in that thesis or you don't, but that is indeed the thesis. And if that's the thesis, deliveries, I think one day are not going to be as relevant as they are today. Right now they are, because FSD is not real in the context of like a full-on robotaxi fleet. And if it's not real for the next 2 years, then every single quarter deliveries is going to matter more and more and more. But if it starts to become real, maybe rides matters a lot more than deliveries. And I think that's what the Tesla bulls are kind of hoping on. This is Tesla's energy storage deployment chart. So Tesla's new Megapack factory currently under construction in Shanghai will start production in Q1 2025, doubling Tesla's global Megapack production capacity to 80 gigawatts in total. And Tesla's energy strong growth continued in Q3 with deployments up 73% year over year. The other thing I think, a lot of people aren't really thinking about is obviously, or at least the bears on Tesla don't love, is the energy argument. If AI demand is increasing, Tesla's not going to be supplying all of the world's energy, but if it's even getting a tailwind from 10 or 20% more every single quarter on energy, just because there's so many more projects that need to be financed and need to be hosted via some form of energy structure, whether it's nuclear, renewable, whatever it is, natural gas, Tesla's going to be involved. And so if Tesla's going to be involved there, I think that should be a tailwind for their broader energy business. Jed says, I never get people thinking buy $100,000 car to save money on gas. Well, I think that in itself is why people haven't bought EVs at an aggressive rate, because like at the end of the day, putting up 100,000 is a lot to ask, especially if you want all the features of it versus just paying for gas. And Elon's acknowledged this, right? Especially with hybrids where you don't have to pay for gas as much. Elon has acknowledged that is what's leading to the bifurcation of certain people that just don't care anymore about EVs versus the people that really are convinced that EVs are the future. And that bifurcation, that divergence between those segments of the consumer is only getting bigger and bigger, which is why I think the pivot to autonomy is what they have to do. I think it at that point is ultimately what needs to happen. Now, granted, the EV subsidy that the United States gave out of $7,500, that was definitely a tailwind this year. If Trump gets elected, we'll see if that lasts. But it's one of those things that still wasn't enough to convince millions and millions and millions of people every single quarter to pick a Tesla over a regular ICE vehicle. S&P down about 0.19%. Tesla now down 4.3%. So Tesla's actually getting a little bit of pain here. Let's do a poll in the chat. What do you guys think? Do you think Tesla recovers from this as soon as the market opens and this is a little bit of a head fake? Or do you think we go lower? Let's see what you guys say. Tesla today recovers, goes lower. Let's see. Let's see what you guys have to say. Someone said I bought a Toyota Prius hybrid because it's more versatile. Tesla was out of my budget, but also no nearby dealership. Yeah, I'm assuming a lot of people have the same experience with that as well. I mean, look, to me, the delivery numbers, to me, it's like, it's interesting, but I kind of just don't care. I like, the more I think about Tesla, the more I think about bots. That's exciting to me. I like thinking about bots. Brett Adcock, CEO figure, he just did a new podcast the other day, and he was talking about Tesla's manufacturing advantage. And like, the more I think about it, the more I think Tesla's going to have a massive advantage once they start scaling it. And then 2 is FSD. Now, again, I've never been the biggest FSD fan either. I've never cared that much about self-driving, but I've opened up my mind to the unit economics exploding if Tesla was able to pull it off. And so that's where I get bullish on it. I don't really care that much about being in a car that can drive myself. Like it's cool. It's not like, I don't know. I'm not buying a Tesla anytime soon, so that's not going to happen for me. But I do understand that a lot of people care about it, and the unit economics are very, very attractive if they pull it off. Palantir right here down about 1% in the pre-markets as well. And so now we got to see on 1010 what progress they make on that. MicroStrategy's down 1%. Bitcoin falling right below 61,000. Bitcoin getting hit. The ETF sold off a ton of Bitcoin yesterday. BlackRock bought some Bitcoin, but ARK sold like $200 million worth of Bitcoin. Fidelity sold, I think Fidelity sold $144 million of Bitcoin. BlackRock bought $40 million worth of Bitcoin, but every other ETF pretty much sold Bitcoin yesterday. Total net inflows into Bitcoin ETFs past 7 months, 45 billion. So 45 billion out of that $1.2 trillion market cap that Bitcoin has is from the ETFs. And who knows where the price would be if that wasn't happening this year. But still down from that 65,000 level that we had a couple of days ago. Nike in the pre-markets is down about 7%. Where's NVIDIA? NVIDIA's had a rough couple days. NVIDIA is basically flat. It's in 116.80. It's kind of flat. Small caps as well, down a little bit in the pre-markets. Pretty much everything's down. AMD's down. Oil and gas is up a little bit, and that's because oil prices are up. So gas stocks are up. XLE is up. CrowdStrike's down. Wow, CrowdStrike back to 274. CrowdStrike was at 295 the other day. Google at 166. Robinhood 2217 in the pre-markets. Bitcoin 60,000. Airbnb at 124. SoFi at 759. SoFi now getting back to the 750s. Rocket Lab is down. Wow, Rocket Lab 899, right below $9 in the pre-markets as well. Looks like we're going to have a little bit of a red day, folks. At least right now, looks like we're going to have a little bit of a red day. Z says there are so many people that can't drive that would benefit. Yeah, I agree. By the way, when did you guys learn to drive? Put in the chat. What age did you guys learn to drive? Because I was kind of late. I learned when I was 21, summer of 2019. So I was 21. And there's two reasons I was late. Number one, I missed my driver's test in high school because I was at a debate tournament in California, and then I just got lazy and never rescheduled it. Number two, I think I was actually kind of scared of driving. If I'm going to be honest and frank, I was definitely a bit scared of like actually driving a car. And then once I got in it and I started learning, dude, it was so funny. The first time I got into my first driver license, my first driver like practice, I put both of my feet on the gas and the brake. And the instructor was like, no, you only use one of those. I was like, what do you mean use? I have two legs. You're not going to let me lose the other. I can't use the other leg. He was like, no, you can't. I was like, oh, okay, got it. But then I became a kind of natural dude. Then I I've driven how many in the past 5 years? I've driven like 80,000 miles or something. Like I learned how to drive. And then 2 weeks later, I signed up to a job that required me to drive 120 miles a day. Not joking, for 5 days, my senior year of college. So I started learning how to get into the like driving mentality pretty damn quickly right after I learned how to drive. Wow, you guys learned at 16? 15 years old? Holy crap, dude. I would have been so scared at 15 to drive a car. I would have been so scared. 13 on the farm? 14 you got your license? All right, you guys are either trolling or that's like... Damn, bro. I was scared for a couple years, bro. I was legit scared. But once I got it, it was easy. But I was pretty damn scared for a while. Learned at 14, hit my first bicyclist at 15, my first deer at 17. Dude, the crazy thing is once I learned how to drive too, I was on a 287 in New Jersey, and it was just big trucks and me at 10 p.m. I would drive back from 10 p.m. to 11 p.m. back to Rutgers, New Brunswick, and it was just me and big trucks for like 2 hours. And, I would try to outrun the truck. So I would get in front of them. Then a new truck would come. Then I would try to get in front of the truck. And that's when I learned how to like really, really drive. All right. You got Alibaba up 3%. You got China still up 6%. Again, China stimulus continuing to gain more momentum. Apple, where's Apple after yesterday? Apple got smacked yesterday by 3%. Apple down a little bit again, 225, down about 0.48%. Apple and Nike both benefited from China, but independently having their own issues. So the China stimulus is not really propelling them. The China stimulus is honestly just helping Baba and the Chinese stocks. Those stocks are really gaining momentum. NEO right here, 723. My sister bought NEO and she has a like $45 average back in 2021. And when it went to $3, I told her like, it's never going to come back. If NEO actually comes back to $40 based on China's stimulus, I mean, like, dude, she's going to have bragging rights for me for the rest of her life. I was like, dude, just take the tax loss. It's okay. People make mistakes. Like 2021, everything was crazy. Like, it's all right. And she was like, nope, it's going to come back. If NEO fucking comes back to $40 because of China's stimulus, I mean, that quite literally would be insane, bro. I will never hear the end of that, ever. I will never hear the end of that because I was so definitive. I was like when NEO was 3, I was like, it's not coming back, dude. Like, it's okay. Like, it would have to not 20x. It would have to 15x for it to come back to her average. I was like, NEO's not 15xing. There's no way. I don't know. It's already 2x. You only got 13x more to go. Maybe it happens. Does she sell calls? No, she didn't sell calls. It's just she just wants to still own her NEO from 2021. iPhone 16 is going to be a massive letdown. We had a couple other reports this morning saying that iPhone 16 demand is not good. I don't know who to believe, dude, because when I talk to people like personally, they're telling me the iPhone demand is crazy, and when they go to the stores, there's so much demand. But when you read like JP Morgan, they're like, hey, we don't think Apple's going to sell enough cars, or not enough cars, enough phones. They're definitely not selling enough cars either. And so I don't know. I think Q3, I guess we'll officially see what ends up happening. We did get a new price target on Meta from Wells Fargo, $652. They said, we anticipate another robust quarter. Let's go to Meta stock right here. By the way, when Iran was launching missiles, Meta was pumping to 582 yesterday, which was just insane. But we anticipate another robust quarter and solid forward guide, but don't expect it to materially change our above consensus 2025 estimate of $27 per share. The stock is increasingly seen as an AI winner, but likely range bound until the 2025 OPEX CAPEX guide for the fourth quarter EPS call, which is fair. Basically, CAPEX determining the net income margins for the rest of 2025. We modestly tweaked our report revenue growth by about 110 bips, and we believe they should be able to do about 110 billion in OPEX. $652 price target on Meta. I kind of agree with that. I think Meta could be range bound for a bit until they get the CAPEX guidance coming in for 2025, because that's going to determine a lot of the rest of the unit economics. But also they might be range bound because they're up more than 60% for the year. Like that's the one thing that's scaring me going into Q3 earnings. Meta, I think Meta is flat on Q3 earnings. Could they go higher? Sure, but I think they're probably flat. Microsoft, I think, is also going to be flat. I don't think they're going to have enough growth to justify the 35 PE. Apple, I think we would be lucky if it's flat. Now, either I'm going to eat my words and it bumps up to 240, or the street's just not impressed with the growth, and hopefully they cannot punish it too much. And then Tesla, it's all based on 1010. It's not really based on earnings. Tesla now down about 4%. Google, I think, has the best chance to have like a real nice 10% move on earnings, simply because of the fact that it's been sold off a lot. But I think the street is so concerned about competitors eating into their search. Even if it's an irrational concern in the short term, it is definitely rational in the long term. And so I think people are concerned about that. And then NVIDIA, I think NVIDIA can end the year back at that 135, 140 range that was at the top if they have better guidance going into Q1 of 2025 and Q4 of 2024. But most of the Max 7, I expect them to just kind of chill out a little bit and not go too crazy. Robinhood caught a bid. Is that fake? Robinhood 2245? We got a minute until the market opens. Interesting. Wow, that's a hell of a move right at the last minute before we go. It looks a little real. It's holding on. Yeah, wow. Right before we go, Meta goes, or not, Robinhood goes green, right? I mean, we'll see if it holds right at the open, but interesting. I guess some people bought it right before we get into the market open. We'll see how that works. All right, we got 30 seconds left until the market opens. Second day of October. I watched Halloween Town last night on Disney Plus. If you haven't watched it, I recommend watching it. Beautiful, beautiful movie. One of the best movies in the world around Halloween. It'll make you feel like a kid again. It was a lot more fun than watching the debate, to be honest. But we are 2 days into October. We'll see how October goes. Yesterday was a pretty violent day to start off the month in terms of volatility. And now let's see how things play out. All right, Wednesday, October 2nd, 9:30 a.m. The stock market is now open. Wake your ass up. Here we go. S&P 567.38 on the day, down about 0.22%. Robinhood actually opens green, 22.40, up about 0.31%. 22.37 right there. So it's up a little bit on the day. We got some green right from the pre-markets. Tesla down 3.6%. There's your green candle. People are trying to buy that dip. What did the poll say? 52% of you said it goes lower. 47% of you said it's recover. So about 50-50 on the recovery or dump. Wow, Robinhood 22.52. That dip's getting eaten up. Huh. Incredible. All right. Tesla 249. You got some green candles right there. So it's not falling further into the low 240s, which is nice to see so far. Meta's at 574, Apple's at 225, Alibaba's at 115, S&P 567 further with the red candle continuing to go down a little bit. Palantir goes slightly green as soon as we open, which is not bad. Where's Rocket Lab? Rocket Lab, Berkshire Hathaway down a little bit as well. Rocket Lab is down 4%. All right, so Rocket Lab gets hit. Rocket Lab down about 4% on the day. Palantir 36.49. Home Depot's down a little bit. Walmart's down 0.5%. Berkshire's down. MicroStrategy's down 1.4. Bitcoin 60,800 on Bitcoin. SoFi going slightly green to flat at 763. FXI China's up 5.4%. Lockheed Martin hit a 52-week high and a all-time high yesterday at 605, down just a little bit on the day. Occidental, that is up 0.44%, given oil prices are up. SMCI is down about 1.4%. Now it is under $40 on the day for SMCI. Netflix 711. Qualcomm 166. Gold at 245. Gold is up. Dell is still down. CEO of Michael Dell did sell $1.2 billion worth of stock 2 days ago. Carnival Cruise down about 2.2%. Oracle 167. HIMS 1891. That's down about 2%. Wow, Robinhood 2267. Dude, 1.5% up on the day. Not too bad. Not too bad at all. Seems like that 2250 level is so far decently resilient. And there you go, 2258 on Hood. And Bitcoin's not even moving up. Bitcoin's moving down and Robinhood's going up. That's incredible, dude. That means people are just like straight up taking advantage of Robinhood's dip if they're buying it, even with Bitcoin going down 1.49% right now. Where's Tesla? Tesla now goes down. Tesla 4.3%, 246 on Tesla. 246 on Tesla. Is Nvidia green? Nvidia is indeed green. All right, getting some love. Again, China on Friday told companies inside of the country to not buy Nvidia chips and to instead buy Huawei chips, which is the first headline that sent Nvidia down from like 125-ish to the 118s. We'll see if that, that headline continues to persist as like an issue for them, but that is what took all the semis down. Let's look at the rest of the semis. Yeah, they're all green. SMCI is barely down. ASML is green. Broadcom's green. Taiwan Semi's green. Dell is green. Micron's green. AMD is green and NVIDIA's green. That's not too bad. Not too bad. Do you think the October upgrades will bring up the iPhone demand? I hope so. But remember, Q3 is done now. So what matters now for Apple is guidance. Apple going down another 0.5%. So if they guide a healthy Q4 because they're seeing October sales are very strong, then I think they can save the quarter. Even if Q3 sucked for iPhone sales, if they guide really good revenue for Q4 for iPhone sales, the street's going to be fine because they're going to be like, all right, so you're going to sell more over the holidays. So October is going to be one of those months where they're really going to have to see if the guidance or if the sales pick up to be able to have stronger guidance as well. Wow, Robinhood 2265. Dude, that isn't, I mean, like it was a pretty red day in the pre-market, 2270. Huh. Did not expect a reversal like that, especially while the market's still struggling, but guess the market's buying up Hood. One other thing about Hood, we have seen zero insider selling since September 9th. So like, we just really haven't seen the insider sell, and maybe they're waiting to sell till after earnings, which is fine. But I think they might be waiting because they think, there's going to be some decent results and maybe they want to get a little bit of a better price, but we really haven't seen any insider selling over the past couple of months now. S&P 566. All right. So S&P's taking a hit down about 1/3%. That one's getting hit as well. Rivian's going green. Why is Rivian green? Huh. Tesla down should not get Rivian green. If anything, that should hurt Rivian. Just means the overall TAM for EVs is decreasing a little bit. But again, Rivian, it's not a deliveries problem. Rivian, it's a gross margin problem. It's been a couple years and they can't get profitable on their gross margins. Rocket Lab now recovering. It was down 4%. Now it's only down 1%, which is nice. Nike down 7.85%. Nike didn't have the best call yesterday. Palantir's flat, 36.42. I mean, I know everyone's waiting for the dip on Palantir. We have not been able to get the dip on Palantir really over the past 2 weeks. Where's Neo? Neo, of course, 737. I'm telling you guys, Neo's going to 41. And my sister is going to laugh at me for the rest of eternity when Neo goes back to 40. Do you know how embarrassing it is to like know a little bit about the stock market and then go up to someone who my sister will tell you herself she just doesn't care about the stock market and then tell her, hey, this stock is not going to 15x for you to break even. It's not going to happen. You should sell it and take the tax loss harvest. And she's like, no, you're wrong. It will. And I'm like, do you even know what a 15x mean? Like, it's not easy to go from 3 to 40. And she's like, yeah, I don't care, but it'll come back. And then actually does this, dude. Oh my God. I will not live this down, dude. I just won't. Humana is down 21%. Did they have a bad earnings? What happened with them? Isn't this the stock that the politicians owned? This was like the insider trading stock, right? Humana. Why did they go down? Why did they go down? They put out a new regulatory disclosure. 21%. This is the one that the insiders were selling, right? Or the politicians were selling. Humana warns of a risk to 2027 margin target after star ratings dropped. They disclosed an increased risk in achieving its Medicare Advantage margin target of at least 3% by 2027. This shows that this would only be 25% of its members are in plans rated 4 stars or lower, down sharply from 94% in 2024. Okay, so from a Medicare perspective, the lack of people that are in the right category for Humana is why the street is taking it down 22% right now. Don't know too much about this company, $25 billion company. I do think it was involved with the politicians. I think I could be wrong on that one, but it was Humacyte. That was the one. Okay, I guess I got that one wrong. Interesting. All right, I'll do some research on this one. Down 22%. Down 22% is pretty aggressive, dude. But we'll look at that one. Wow, Hood. Yeah, dude. I mean, there you go. 2280s right back. That is interesting, dude, especially with Bitcoin being down and the market being down. For Hood to be independent of both of those catalysts is pretty damn interesting. That's not too bad. All right, Chris said to give him a call. Let's call Chris. Let's get his perspective on what's going on in the markets. And let's see what he has to say as well. Yeah, Hood's doing not too bad right now.
What's going on?
Chris, what's up? How are you?
Good, man. Good. I'm glad this China thesis is playing out. It was one of the more, I would say, obvious plays in the market. The funny thing is, I know a lot of people are wondering right now, like, how high could this thing go? And I honestly can't tell in the short term because there just seems to be a lot of people piling in. But in terms of like technicals and fundamentals, I mean, this thing's got a lot of legs to go.
Okay, so before we get into China, because I want to ask you a bunch of questions on that, let me get your thoughts on a couple other things, and then because I know you have a lot of thoughts on China, and we'll get deeper into that. First off, Tesla. What is your reaction to this number that we got? Any reaction at all?
Who gives a shit, dude? Who gives a shit, man? Like, seriously, it's like a few cars here, a few cars there. It's not a big deal. I think the bigger issue that we're going to have to contend with is there's just a general slowdown in the economy. If the market and the economy starts to slow down, then Tesla sales numbers will keep coming down, in which case the stock price will come down. But, you know, Tesla is an innovative company. There's other parts of it that are doing really well that are going to like make up for it. So I think Tesla is the perfect trading stock, dude. I mean, if you've noticed over the last couple of years, anytime this thing gets oversold, it zooms right back up, right?
Yeah.
And the funny thing is there's like all these like Twitter accounts now that basically anytime this thing rides up, it's like, look, I'm the smartest man in the world. Like, look at my Tesla position. And then all of a sudden, like, the shit drops and they drop off the planet for like a few weeks and then they all come back, you know? So I would say this is the perfect trading stock. So when the thing gets overbought, you know, that's when you should probably take some profits. When things get oversold, you should buy some and, you know, enjoy the ride, you know?
Okay. Nike down 7%. Is that, I know, I mean, we're going to talk about China, but that is exposed to China heavily. Is there any value there? You think that exists?
So I kind of spoke about this yesterday with Sam when we did our Hidden Edge podcast. You know, a lot of people don't realize this, but, you know, there is this huge movement within China to buy domestic brands. Okay, so like a lot of foreign companies were able to like carve out like big market shares in China, but the Chinese public in general, and because the government is kind of supportive of it, are very anti-Western. Not everyone, but a lot of them are anti-Western brands now, and because of that, you're starting to see that kind of impact these companies and their bottom lines. So I'm not sure what the equivalent of Nike is in China, but there's a lot more deglobalization happening around the world, and with deglobalization, a lot of the companies that benefited from that globalization are also going to be on a weaker footing going forward. So this is where I'd say, as much as I love some of the policies when it comes to President Trump in trying to bring up some tariffs to make sure that we weren't losing jobs, I think he also launched this protectionist regime that's now kind of like reverberating, in the Biden administration kind of like kept up with it. So instead of having, a more free exchange of goods and services, what you're starting to see is countries kind of put up guardrails and put up walls against cheaper sources of supplying, like of goods and services. So
having said that, let's talk about China then. I mean, FXI is up another 5%. So I guess the question here is, where do you think China's top is? And also, I asked you this question a couple of days ago, but I want you to answer it again. Is this realistic for the stock market to go up in China just because the government's printing money, or is this a lot of horseshit that's eventually going to collapse?
I mean, ask yourself what happened during COVID, right? When you had this giant wave of stimulus coming into the market, you had consumer sentiment starting to improve because like the stock market was jumping up, right? All of those things are going to get factored into the psyche of the investor. And I think a lot of people are underexposed to China, like not only just here, like the Chinese people, but overall fund managers. Everyone right now is very long India and US and some of the other more G7 countries. But if you look at the PE ratios on a lot of these indexes, they're all sitting in like the mid 20s. So there's just not a lot of value left in the Western market. So, if you're a traditional value investor, you've got a good sized portfolio, you kind of want to, you're looking for opportunity. And believe it or not, Amit, there's really not a lot of opportunity in this market.
Well, I think that's your big point, because PEs are so expensive in the States. Like you're trying to find international levels, right?
Yeah, and that's normal, right? Like you're going to have these periods of outperformance by U.S. companies, but then also there's a level of catching up to do outside of the U.S. Like, why do you think Buffett was been heavily investing in Japan? Because there's more value in some of the Japanese companies, like about a year and a half, 2 years ago, that maybe he didn't see so much in the U.S. So, from a value investor standpoint, I'd say you have to look at alternative assets. You have to look at other markets, and then find the value there and see if you can get a great return for your shareholders. And I think right now you're seeing that with a lot of people within China. So the world itself is very underexposed to China, and I think a lot of money is rushing in right now into the Chinese markets. So, we'll see what happens.
All right, let me get your thoughts on this screen, this chart that I'm showing on the screen. It shows that S&P 493 EPS growth is still 7% below, or 8% below the Max 7 growth in the fourth quarter of 2024. What are your expectations for Q4 on the Mag 7 in particular? And is there anything people should be worried about going into this Q3 earnings season?
I mean, you're gonna have to take each one individually and then work on your thesis for each one, right? So some of them are trading at valuation highs, and some of them are not really that great. Like Google right now, like you said earlier, is probably one of the more undervalued of the Mag 7, whereas Apple, may be a little bit overvalued, especially considering that their top line growth isn't more than the single digits, right? So you're paying a 35 PE on a company that's barely growing. Where at least with the other companies, they've got their cloud businesses and they're still growing at a double-digit pace. The only thing that Apple really has going for it is that they're still generating immense amounts of cash flow and doing a ton of share buybacks. But that still doesn't, in my opinion, doesn't justify like a 35 PE at the moment. So I think Apple is going to have a make it or break it moment. Nvidia is still gangbusters, so that's good. But the one thing I'll say, Amit, if we do get a drawdown, which is very likely in the first couple of weeks of October, and we see that things get really oversold, I'm a net buyer. I think we get a Santa Claus rally, man. Like, there is a huge relief rally post-election that's going to be coming up. So I would say, when are you coming back from India?
October 21st.
Okay, so bring some money back from India, bro, because you never know, man. Once this stupid election is over and we get some clarity, I think the markets are going to rally. So
what would be the Mag 7, the first Mag 7 you buy? Let's assume all Mag 7 fell 10% tomorrow. What's the first one you go to buy?
First one is Google for sure.
Even if it falls 10% from here?
Yeah,
Okay.
Easily, dude. Google is one of the more undervalued ones. Like, a lot of the risks that Google is facing are more like legislative things, and that's something that's like bad PR in the short term, but long term, still great business, generates tons of cash flow, has multiple streams of income. They're not going anywhere. So Google is probably the top pick among the Mag 7. Number 2 after that would probably be Amazon. Amazon's got a lot of levers that they can pull in order to, really boost up their share price. So Amazon is another one, and then Meta, and then Microsoft, and and so on and so forth.
What do you think about Jay Powell saying we're going to do 25 and 25 and kind of confirming to the markets you're not getting another 50? Because I think the markets did think we were getting another 50 right after, and then another 25, which would be 75. But now he kind of tempered expectations. Private payrolls today came in at 143,000. It does look like the economy doesn't need that many cuts. What are your perspectives?
I'll be honest. I don't even think that if things are going the way they're going, I think they should just pause on skip one.
But why? Well, what is happening that's making you think we should pause? Is it just job growth? Is that it?
No, I mean, like, we've got everything's working fine. Like, usually you want to cut rates when things are not working so you could be stimulative, right? You don't want to overstimulate when things are really good. So right now, if things start to sour, then yeah, you always want to have like that optionality to, do a couple of rate cuts and scare the bears back into their caves. But the last thing you want to do is, hey, everything is great, let's cut some interest rates. No, like right now things are okay. So let's keep them the way they are. And the worst thing is, they're stuck between a rock and a hard place right now. So this whole thing that's happening in the Middle East, it could pop off to something more major, right? Then you've got all these strike issues with the ports that could end up causing, structural delays in supply chains. And now you've got yourself a second round of inflation. So last thing you want to do is cut interest rates and then literally have to start raising them in December because inflation starts to pick up again. So they really have to be very, very data dependent on how they're going to proceed. And I think they're smart enough to know what to do. But my base case right now for them is, yes, a quarter basis point cut in November and another one in December. But Amit, the thing that we honestly need to ask ourselves, and this is very important, which is, what is the actual neutral rate going to be? Right. What do you think the neutral rate is going to be?
Well, I think 3% by the end of 2025 is possible.
See, that's the funny thing. 3% by the end of 2025, but what about longer term? What do you think it's going to be?
Well, we had 0 for like a decade. So, I mean, I feel like it would still be 2.5 to 3%, unless I don't think we're going back to 0.
See, that's the thing. No one really knows, man. It could end up going back to 0 because the demographics are really fucked up coming up. I really need to stop cursing, man. I gotta be better about that, especially when we're live. Long term, we could have some like another round of super deflation, especially with a lot of the advancements in AI and then demographic collapses across the planet. But like I'm at the same level that you are, where I think about 2.5 to 3 on the federal funds rate is not a bad idea. But that also means now that the 10-year is probably going to rise to above 4, right?
Right.
Because otherwise, like, why would the 10-year be the same exact thing as the federal funds rate? So you're going to need.
Okay, can you explain this to us in a simple way for everyone to understand? Why is this 10-year not really coming down, even though we cut by 50 bips? And why does JPow not like that?
Well, you just answered your own question. If you think longer term interest rates are going to be 3%, then why would you be willing to accept a 10-year bond for 3.75? Wouldn't you want at least like 4.5?
Right.
Right. To compensate you for the risk of duration risk? So if the federal funds rate, which is overnight lending, is 3%, then you need a premium for that 10-year. So right now, the 10-year is actually overvalued if your base case is 3% going 5 years out.
Gotcha. No, that makes a lot of sense. And so if people are expecting we don't get back to 0, then they will want some premium on that 10-year, and it's hard to buy if that premium's not there.
Yep.
All right. Kris, last question. I haven't asked you this in a while, so I got to ask you. Peter Thiel has been selling a lot of Palantir, about $700 million worth of it, 36.54. It's been holding 36 for a while. Do you think this collapses, or do you think it has enough momentum to sustain these levels?
This is like Tesla's $400 moment, in my opinion. Like, the sentiment is just over optimistic, very bullish. I think Alex Karp has done such a great job of selling the stock in terms of like the price on it, that people are over optimistic about its growth prospects. So I think that the company now, you're probably going to see flat to no growth in terms of like total shareholder return for the next 5 years. So, the market has gone way beyond what the valuation is. Everyone knows that it's high. It doesn't mean that Palantir is not a good company and it's not growing. It's going to grow. But if you buy now, you're likely to underperform the market for the next like 3, maybe even 5 years. So, at least that's my opinion. I'm probably wrong, but who knows, man? You never know with Palantir.
All right. That's Kris's take. Kris's Twitter in the chat. You guys can follow him there. Kris, thank you for joining. We'll see you next time. Take care. Bye. All right. Obviously, I disagree with that perspective, but that's Kris's take. It is what it is. Look, I do think Palantir is expensive, but I think if they get to 40, 50% growth, we're going to see margin expansion. We're going to see EPS expansion. We're going to see PE expansion. We're going to see a lot of expansion. And I don't know. I think the growth we can see from the company is beyond what we think it is. Maybe not in the next 2 quarters, but closer to end of 2025, early 2026. I think it'll start to take off. Look at Robinhood, bro. Look at this thing. Oh, 23. This is, dude. I did not. I expected me to have to continue to double down on buying the dip today because I saw Bitcoin was down in the morning. I saw the S&P was down. I was like, all right, Robinhood's not gonna just go independent of those two. Look at the strength, dude, on that. Holy crap. Holy freaking crap. 2304 on Hood. Just incredible strength on yesterday's price action to the reversal today. Again, yesterday we went as low as I think 22.15 or something. And here we are at 2306. I think 22s have strong support. That's why I bought yesterday at 22, but I was expecting a bit more pain just given the other parts of the market are down today, and it seems like it's all right now. So 2305 on Hood, not bad, up 3.22%, getting a bit of momentum right there. Tesla, wow, Tesla's taking it. Tesla's taking it on the chin. Tesla is $2 away from going below 240. Tesla is getting hit right now, 242. That is so weird, dude. These were not bad numbers. These were not bad numbers. For the street to get this upset over missing deliveries by 1,000, like instead of 263, it's 262, and the street's upset about that. I don't know. That's a weird reason to take it down 6%. I guess you could say Tesla was quote unquote priced for perfection, and they needed to really put up amazing numbers for the street not to get upset. But I also think they were, I also think there's catalysts independent of that are still important. And Deliveries is not the biggest one. 242 right here on Tesla, down about 5.83% on the day. Palantir goes green as well. Look at that, 36.65 on Palantir. Going green, up 0.52%. Again, no big headlines today outside of a small partnership they have with a company around Edge AI, but that's not like a market moving catalyst, I would imagine. So you got Palantir right here at 36.64. Robinhood 22.95. Rocket Lab's down about 2.64% of the day. Tesla 242 down almost 6%. And then Apple, look at Apple, 223. Apple was 232 on Monday in the pre-markets, by the way. Oh, I forgot to ask Kris about oil. I was going to ask him about oil, but yeah, oil's up right now as well. Up another 3.44%. Again, it's not at horrible levels. It's not like 77, 79. It's at 72. And I think it should come down when the Iran-Israel stuff calms down, but I think the market is not thinking it's going to come down. XLE right here at 91, at least not in the short term. When that does calm down, I think oil goes back to 70s or 68 to 70, which is not too bad. Tesla's back to where it was a few weeks ago. No big deal. Yeah, again, I think for Tesla, we have to put it into context. Tesla is up a lot from the lows this year. And if you didn't get the exact lows, it's whatever. But, if you've been in the stock for a while and you were able to DCA on those lows, then you're sitting nicely on some shares, probably on some gains. I think a retest of like 220 is not crazy. I don't think below 220. I mean, like I could see it falling to 220 if just like, sentiment gets bad, and then 1010 we have a little bit of reversal, but I don't think we need to go back into the low 200s, especially not with China printing and the Fed getting ready to cut and Q3 numbers for earnings hopefully going to be better than what some people think. Like I think this 230ish to 240 range is reasonable. I don't know if it's a massive buy the dip, just because I think there's so much confusion around 1010, and could 1010 send it to 200 or 1010 send it to 300? I guess we'll eventually find out. Crossroads says 220 is where I see it as well. Yeah, I agree. If there is a little dip, I think 220 is the dip. I don't think it's 185 or 195 or something. At least not now. Snapchat's up quietly 15% in the past month. Well, Snapchat, it always falls aggressively after earnings, and then it finally comes up a little bit. So if you bought it at that low $8 range, you're up a couple bucks. And so there you go. The problem is I think Snapchat has no vision, and we all know Snapchat has no vision. Like the glasses is stupid that they put out. It's not competing with Meta. The advertising business is horrible. They have a ton of users, but again, every time someone says, well, they have 850 million users monthly, I'm like, yeah, but like none of them pay for anything because like they're kids and they can't afford to, like the advertising demographic is just not. Well, plus when you're on Snapchat, do you really want to see an ad? Like you're on Snapchat, like Snapchat. I don't use Snapchat anymore, but when I used to use it, like it was not the place where you would be influenced by advertisements. You were just trying to like send pictures to your friends. So I don't know. I think that company needs a little bit more of a vision for people to get excited. Alibaba right here up 1.82%. Nike still getting hit, down 7.5% on the day. Nike really taking it on the chin right here. Bill Ackman sold Google for Nike for a reason. Still trying to figure out what that reason is, but he did indeed sell it for a reason. 11 million people paying for it monthly. So you're talking about the $5 Snapchat Plus program they have. The problem is they don't make any money off that. So you have to remember Snapchat's business model. Snapchat pays a ton of creators, most of them in Los Angeles. These are the creators that like aren't that big for YouTube and like don't make any money off TikTok because TikTok doesn't pay that well. They go to Snapchat, and whatever money Snapchat makes from like their pay per month program from like the 11 million people that pay $6 a month, they give all of that to the creators, and the creators are obligated to post like 50 to 100 different snaps a day on their Snapchat story. They don't have a business model like YouTube does, where they can take a percentage of the ad revenue and incentivize creators to keep posting, which creates like an infinite stream of creators coming to the platform, posting, and then YouTube taking a cut of that revenue, which is what Snapchat would do. Instagram and Facebook don't even take any cut of the revenue. They keep all of it. YouTube's really, and I mean, TikTok gives some money, but it's not like YouTube. YouTube's the only real platform on the planet that creators can sustainably make an income on. And so until Snapchat figures that out, which I don't think they're going to be able to, just because they don't have the user base to get people to care that much about that type of content. Remember, it's like 2-second pieces of content where you're just constantly flipping through. It's hard for Snapchat to really monetize that. Bitcoin's moving up a little bit. You got a green candle on Bitcoin. Look at that, 60,544 to 61,000. So that green candle, super nice for Bitcoin. Not too bad. They should integrate some dumb game into Snapchat and sell skins and stuff. Yeah, I think e-commerce they tried to do in the past. It's never really worked. I do think they should. Yeah, the amount of OnlyFans models that are on Snapchat that promote their OnlyFans through Snapchat, I mean, I don't know how much OnlyFans is worth, but I feel like Snapchat should do whatever they can to buy OnlyFans. Like, that would be a hell of a business model if they could integrate that. They would have to figure out how to keep it separate from like the core product or whatever, but OnlyFans makes money. OnlyFans makes money. Snapchat doesn't really make that type of money. Netflix at 707. All right, so here's a question for everyone who's bullish on Netflix. What does Netflix need to do to become a $1 trillion company? Netflix is at 300 billion right now. For a 3x on Netflix, let's say over the next decade, what does Netflix need to do to become a $1 trillion tech company? I'm curious to see what comments people have. I asked this question last week on the market close, and we had some interesting answers there. But I can't believe Netflix is at 700, dude. I mean, like, I get it. People are buying it, but 300 billion for content is kind of wild to me. I know they're the only profitable streamer, so I'll give them that. But dude, outside of a couple of shows, I don't think Netflix is good. Oh, you guys know the rabbit hole I went down last night? You guys remember I told you I go down these rabbit holes and it stops me from watching movies? The rabbit hole I went down last night is because of Netflix, actually, is I started watching the R. Kelly thing they put out in 2019. And I went down this rabbit hole of like learning about R. Kelly. And maybe I wanted to learn about him as well because the whole P. Diddy stuff is in the news. But like, that's, you know, dude, it's just crazy sometimes how famous people get, how rich people get, and what they end up doing with all that power and wealth. So that is the current rabbit hole that I'm in right now in terms of learning more about what's happening. But it happened because of Netflix. Like, it popped up yesterday. I was like, you know what? Let me just watch this because there's nothing else good on Netflix. And it was pretty crazy. If you guys haven't seen that documentary series, it is pretty insane. More like OnlyFans by Snapchat. Actually, you know, Evan Spiegel would never sell, but yes, that is, I feel like OnlyFans could get away with buying Snapchat. Invest in sports, create live competitions that allow interaction. So they did have a big deal with WWE. They would have to win like the NBA rights, I feel like, to really get a ton of momentum. They do have one of the football games on the NFL on Netflix, I think, for Christmas. But I feel like it has to be outside of content. I feel like they have to do something to increase their go-to-market that isn't just based on like a new show. It has to be something so interesting for Netflix that gets people more excited, you know, about the business. And maybe it's gaming, but I feel like they've tried gaming and that hasn't really worked. Maybe it's, you know, theme parks, but I feel like that's very heavy on expenditures. So I'm not sure. I'm not sure what exactly that would end up being. SoFi launches a platform for companies to manage equity programs, including IPOs. Okay, is that some news we got off SoFi just now? SoFi. Okay, so here we go. CEO Anthony Noto says, unfortunately, traditional DSPs often have high account minimums, requirements, carry significant cost to companies, and lack benefits to underwriters, limiting their appeal. SoFi now offers companies going public a turnkey, 100% digital way to offer IPO shares to employees and other people who help build their business and whomever else they want to direct the shares to, whether it's 10 or 10,000 people. People can open an account from a smartphone in seconds, transfer money seamlessly, and stay informed throughout the IPO process with no cost or deposit requirements. At SoFi, we continue to provide Main Street investors access to products like alternative investments and IPOs. Is SoFi up on this news? SoFi, it's up a bit on this news, 2%. I guess this is important news. This is not bad. I guess they're enabling companies to allow the directed share of their IPOs and capital raises within the product itself, mainly for employees, partners, and customers. I'll do some more digging on this, but this is not bad news. I mean, it's another feature to the product, so that's good. Palantir's running. Where's Palantir? Whoa, baby. Look at that. Look at those green candles. Palantir and Hood, baby. Hood at 23. Palantir's making another run for 37. Guys, Peter Thiel sold another $160 million worth of stock yesterday, and the market does not care. It is the most remarkable thing I've seen covering Palantir over the past 4 years. I mean, quite literally the most remarkable thing I've seen. An insider can dump close to $1 billion worth of stock in a matter of 6 days. It's not over 6 months. This is over 6 days. And the market doesn't care. Look what happened when Michael Dell sold $1 billion, and Dell fell from 122 to now it was at 113. Now it's at 115. But you did have a dip there. Palantir really wasn't that big of a dip. Really not too aggressive of a dip. team up with DoorDash or buy them if they get the cash. DoorDash is too expensive for Netflix to buy. DoorDash is a big company. DoorDash is what? I think 30 billion, if I'm wrong. Or DoorDash is 58 billion, dude. Yeah, Netflix can't buy DoorDash. But I agree. They do need to do something creative like that. Something better than just like buying a new TV show. They need to have some type of new business line added to them. I don't know if DoorDash is the right one, but something that could help and that could maybe expand the broader business. Mercado Libre is down 4.9%. Why are they down? Mercado Libre. By the way, this is one I don't think we look at enough. I think we all have to do more DD on Mercado Libre. I mean, I know we're all talking about China and stuff, but this is the Amazon of Latin America. And it's had a pretty strong year. Once they do a split, I think it'll be easier to get people excited. JP Morgan downgraded them from overweight to neutral with a $2,400 price target. So even though they have a $2,400 price target, the downgrade is what's causing the 4% decline. They said Melli is still in an investment phase and is unlikely to meet or beat consensus estimates, giving increasing expenses with the logistics and ramp up of their credit card business, which carries a structurally lower margin. All right, so they just believe in the short term there's going to be some margin cuts and lack of consensus beats on estimates, which is why they are downgrading them right now. Not too bad of a downgrade, though. Not too crazy of one. Jed says, the end is near for Palantir. I remember when Elon and his bro was selling at 400. Insiders know a lot more than you do. Tread lightly or hold bags for a long time. Who agrees with what Jed said? Who agrees? Who agrees with Jed Patel's opinion around Palantir? I mean, look, dude, I'm obviously the insider selling is a sign. It's just, I think the market has a certain narrative around Palantir that is independent of insider selling. And maybe that narrative is propped up because of Bank of America's $50 target or because of Dan Ives or whatever. But I'm not going to fight the narrative. If the narrative is the narrative, it is what it is. And I mean, I'm waiting for a really big dip and I'm not seeing it yet. And I'll keep waiting for the rest of the year. We'll see if it happens. But how long did Tesla stay at 414, by the way? Let's see. How long was Tesla at 414? Because I remember in October, I had like just joined Twitter and I saw Tesla go to 414 and everyone was so excited, but I didn't really know what was happening. Okay, so Tesla stayed at 414 or 407. That's what Google is saying was the top on November 5th. And by March 11th, wow, 4 months later, it went from 400 to 265. Tesla is lower than what it is today in March 2022. So Palantir, let's look at Palantir's chart. So that's what, 4 months? Call it 5 months. 5 months of a decline from that top. So Palantir right here hit 37 on September 23rd. It's been a week. I guess we'll check in March of 2025. And if Palantir declines the way Tesla declined, Palantir is going to go all the way to $18. If this is really a Tesla $400 moment of 2021, Palantir will be $18 in March of 2025. If it is not a Tesla $400 moment, which, by the way, Tesla got to 400 when interest rates were 0. I think that's one thing we have to remember. Palantir is getting to 37 as interest rates are 5%. Then the Tesla comparison makes no sense. If Palantir is even 27 or 28, which was what, 20% correction? I mean, like that's not a 50% decline the way Tesla declined back in March of 2022 from the highs of October of 2021. So we wait until March of 2025 and we'll see what happens. But we'll see kind of, how they execute, how earnings look. But if it's not $18, then I think maybe it's not the same Tesla story. FXI up 5.6%. Where's Hood? Hood is 2305. Wow. Robinhood up 3% of the day. Not too bad. Palantir already went from 42 to 7. That's a good point. Teddy, the stock picking poodle. That is a great point. Teddy, I love your name. You've got to give more comments so I can keep saying your name. Teddy, the stock picking poodle says, Palantir already went from 42 to 7. That's a hell of a point. We did already have a pretty dramatic decline. And that was the same time when Tesla had their decline. Now things are different. I know the valuation's still up there, but I'm just saying things are a bit changed in terms of the macro and their earnings growth. And by the way, if Palantir really did go to 18, bro, I mean, I think a lot of us would get a little excited if Palantir goes to 18. As long as nothing crazy changes, as long as it's just like maybe a little bit of the numbers aren't amazing, or maybe the macro is a little wonky. You give me 18 on Palantir, dude. I mean, given what I now know about the company, given having visited the company, seeing the culture, seeing the employees, it's just a whole different dynamic in terms of how I think about where their trajectory can go. And yeah, it was not worth $42, 100%. In 2021, it was not worth 40. I mean, even Carp came out and said it was overvalued at $100 billion, right? Like it was absolutely not worth anywhere near that $40 range. But it ended up getting there because the market was the market at that time, and there was a lot of euphoria. Tesla down 5% on the day. SoFi up a little bit, up 2%. Dell up 2%. Snapchat up 2.35. Rivian down about 2%, up 2%. Nvidia getting some momentum. Rocket Lab still is down. Robinhood 2309 now, up about 3.4%. S&P 568. S&P getting a little bit of recovery. S&P was at 565 like 20 minutes ago. Now it's at 568. We still have to get through 1030, but 568 right now. Lockheed Martin is down from 605 that it was at yesterday. Raytheon at 124. Netflix at 706 right here on the day. At 1030, at 1030, usually the algorithms smack the market. That's what happens at 1030. There's nothing that special that happens at 1030, but literally every day for the past 2 months at 1030, the market gets smacked. So that's why we have to get through 1030. Why did you sell SoFi? I did not sell SoFi. I actually bought options on SoFi yesterday. I told you guys I bought 100 spreads from $15 to $20 leaps for 2020. It is an asymmetric bet. If I'm right and SoFi gets to 20 by 2026 January, my 3,000 turns into 50,000. So it's a very asymmetric bet. If SoFi even gets near that, gets to 17, 18, that 3,000 turns into like 25, 30,000. So to me, I'm betting on a 3-year downtrend finally moving when it comes to SoFi to the upside. And I'm betting on Noto giving real guidance based on rate cuts that just takes the business higher. Now, the one thing about SoFi is I was looking at their tangible book value last night. It is $3.92. SoFi is trading more expensive than Bank of America and JP Morgan. So if you think SoFi's 780 price target is not a premium to their tangible book, you are incorrect. They are absolutely trading at a premium to their tangible book more than other banks. However, which is why people say it's over. That's probably why the shorts are shorting it, right? They think, hey, it's a bank, like it should not be trading almost 50% above its tangible book. However, the SoFi bulls say that it's a tech company, and the tech growth, which it is putting up close to 20% growth, that should lead it to be close to the $15 range. I don't know who's right, to be honest. I have no clue who's right, but I do think that it is an asymmetric bet to assume SoFi breaks out of this 3-year trend. And if it doesn't, then it doesn't. Then everyone got it wrong and it's whatever. It's like you move on. But if it does, I think there's some momentum there. And hopefully rate cuts are bullish enough to cause that. And hopefully the shorts cover, and that'll be your thesis for SoFi if it plays out. Palantir 36.82 right now. Robinhood 23.09. Robinhood continuing to see some upside, up 3.4% on the day. Rivian at 10.63. Neo at 7.04. Dell at 1.15. Snapchat here up 2.5% on the day at 10.69 as well. Amit, why are you ignoring SoFi's EPS growth? Look, the EPS growth is good, but again, I don't think the street cares about that. The street cares about like, hey, do we think there is more to this than just being a bank? It's just that simple. It's not about ignoring revenue growth or EPS growth. It's about, do you think there's a narrative attached to this company that is greater than a bank? Because if there's not, then why are we valuing it at a higher price to book than JP Morgan or Bank of America or Wells Fargo or Citigroup? It's just that simple. And there's an argument that it shouldn't be valued at those levels. There's an argument that it is because of the tech part of the nature of the platform. I've been a bit skeptical of that tech part. But I think earnings growth in Q4 for guidance is going to have to really prove that there is more momentum for other parts of the business. And then we'll see. What else do we have? SoFi's options are cheap to buy versus Palantir and Tesla. Well, yeah, that's why I bought them. I mean, look, Palantir and Tesla options are not cheap right now, guys. I mean, Palantir is up 120% year to date. Tesla's up 82% from the lowest. Tesla, by the way, down about 5.8%. Buying options on these guys. Like, I know everyone's obsessed with the $330 call option for June of 2026. The time to buy that was when Tesla was 180, not when Tesla was 243. I mean, it's a lot more expensive now. So the only stock that I think is reasonable enough to buy like aggressive options on, like a $20 strike, is SoFi, because it's been stuck. I don't have a lot of faith it's going to get there. I have some hope that it breaks out of a downtrend and that leads to some momentum and short covering and things can then happen. And then maybe I can exit when it gets to 15, 16 bucks, but there is a lot of risk reward there. And now we just got to see how they execute. And if they execute well, hopefully that'll happen. 2027 $10 hood SoFi calls. I don't hate those either. I don't hate those either at all. Amit, I read that Tesla can hit 900 to 2,500 within 10 years. Thoughts? So a 900 on Tesla would be, let's just assume 1,000. That's like a basically 2.5, no, not 3.5x roundabout in a decade. So $1,000 would basically put Tesla at, call it 5 trillion roundabout, 4.5 trillion, something like that. Yeah, I think that's possible, but I think that's possible primarily based on Optimus, not really FSD. At least not yet, because I don't have enough proof that FSD is like getting ready to scale in prime time. I mean, in 10 years, if FSD takes another 2 years to roll out aggressively, then you only have 8 years left for it to like really, really scale. And then, you're looking at multi-trillion-dollar valuations. It's just tough to get there. Whereas Optimus, I think, can scale within a couple of years if they actually get it right. So yeah, is it possible? Yeah, but it's also, I mean, saying it's 5 trillion in a decade kind of feels like the Cathie Wood stuff that, it's going to go to 9 trillion based on like FSD. Like, I don't know, dude. That's an aggressive target. That's not backed by any numbers outside of like the narrative. But at least there is a narrative. That's the good thing. There is a narrative. Oh, it's a 4x? My bad. It's a 4x. It's a 4x. And that's the one thing you got with Tesla. You got a real narrative. Where some of these other stocks, the narrative is just like not there. And it's not exciting at all, But I don't know, dude. 5 trillion in a decade. That's a lot. And I mean, at some level, there's going to have to be earnings growth. Like, that's the other thing about Tesla. I remember I was having this debate on Finance Junkie. Some of you guys might remember this. When Palantir was worth 30 billion and Tesla at the same time was worth 700 billion, I had a big debate with Carlos. And I was like, it makes no sense in the world if you're purely focused on profits to invest in Tesla over Palantir, because a 10x on Palantir is 30 to 300 billion. That's a lot to ask for, but it's not crazy. A 10x on Tesla is 700 billion to 7 trillion. We have not seen a $7 trillion company before. The type of growth Tesla would have to put up would have to be beyond our wildest imagination to get there. Is that possible? Yes. And do I think that is possible? Yes, which is why I want to build out a Tesla position next year, just based on the potential of that happening, given we're getting into this, industrial age of AI and all the different things that could happen. Tesla is the only real world use cases of AI with FSD, robotics, etc. However, I feel like it's easier for Palantir to go to 300 billion. Look at Palantir, 37, boom, back to 37, back where we belong, baby. I think it's easier for Palantir to get to 300 billion versus Tesla to 7 trillion. Just like mathematically, I feel like, and it's going to be hard for Palantir as well because they don't have the types of revenues Tesla has, but I feel like they can get there. So yeah, I mean, 5 trillion in the next decade, I think is a lot to ask for, but if anyone's going to pull it off, I think it'll be Elon, and it'll have to be based on some combination of Optimus. I don't think it can only be FSD. I think Optimus has to be involved there to get that to happen. Wow, look at Palantir, 3705. 3705. Look at that. Dude, I'm telling you guys, I have never seen an insider dump as much as Peter Thiel has dumped in the past week. And like the stock market does not care. Like they're ready to buy his shares. They have no problem. No problem to buy his shares. Again, in March of 2024 or 2025, either we're going to see Palantir at $18 and it'll be a 400 to 200 moment with Tesla back in 2021, or the sucker's going to be at like 45 in March, or we're going to still be chilling around this high 30s range, which I think is great. We've consolidated for 6 months in the high 30s. I mean, like, that's not a bad thing either. And if we fall to like 27, 28, I don't think a lot of people will have a problem with that either. It'll be a little annoying, but people will, I think, happily buy that dip. So unless we have a full-on 50% correction, which even then I'll be, I wouldn't mind buying shares at that point. Like, it seems like there's a lot of scenarios that are not too bad for Palantir. What about Nvidia insider selling, Amazon all insider selling? Yeah, I mean, look, that's another good point. But you could argue Jensen's insider selling actually has hurt Nvidia. Because remember last week when the headline came out, Nvidia up 1% today, that Jensen's going to stop selling, and the stock went up to like 125 that day, just based on that headline. So you could argue that him selling like 120,000 shares every other week was pissing, people off, and they were just waiting for him to be done. But with Palantir, that's not the case. Like Palantir, I mean, every day we get a new Form 4, and like there's like zero reaction, not in the overnight markets, not in the pre-markets, not when the market opens. There is an insatiable demand for these shares for some reason. And that's why it's exciting. Okay, what else do we have going on? Let's see, where's Bitcoin? Bitcoin is okay, Bitcoin's ramping up a little bit. So Bitcoin trying to get back to 62, which is actually good. Where's Hood? Robinhood 2306, still holding 23, which is very nice. Google 165, IWM 218, and then oil, XLE, oil at 91, 1.44%. You guys want to know something about oil? You want to know something about oil? So if you trade oil futures, you have to worry about the risk of actually having to buy the barrels of oil that you trade the futures on and take ownership of those barrels of oil. Usually it trades in quantities of 1,000, if I'm not wrong. So if you're doing futures on 1,000 barrels of oil, you actually might have to own 1,000 barrels of oil if you get assigned. Did anyone know that? Do you guys even believe that? Because I found this out last night and I could not believe it. I could not believe it. Like literally, if you lose on the futures contract, they will deliver 1,000 barrels of oil to your location and you have to take ownership of it. It's a small chance, but there is a chance. And guess who told me this yesterday? You guys probably already know, Mr. Steve. We were on the phone and he was like, by the way, if you trade futures of oil, you know you're gonna have to take ownership of it. I was like, what are you talking about? He's like, you're gonna have to take ownership of the oil. I was like, oh yeah, like if oil's 70 a barrel and I'm trading futures on 1,000, I'll have to pay 70,000. He's like, no. You're gonna have to pay 70,000 and you're gonna need the garage space to own the oil. I was like, you're lying, bro. I was like, there's no way in hell I would have to actually own the actual like barrels of oil. He's like, nope, look it up. I looked it up and he was right. Like there is a small chance you will legit have to own the barrels of oil. And I could not believe that. I was like, what? I was like, could you imagine like you fucking have to take responsibility for a couple hundred barrels of oil and they bring it to your house and then your parents are just like, what? You know, you have to put it in your garage somewhere. Like there's a liquid market. You could definitely sell it. But how do you even go sell a barrel of oil? Like, who do you go to? Like, do you go to your local Exxon Mobil and be like, hey, I've got some oil? Like, it would be such a weird situation if that happened. I couldn't believe that was real. Okay, let's get an update on the workers and see what's going on with the port strike. Still no update on them, but let's see if we can get some updates over the next couple of hours.
Last night's vice presidential debate between J.D. Vance and Tim Walz. We are joined this morning by former SEC Chairman Jay Clayton. He's now Apollo's.
The Fed has a tougher job today than they did a week ago.
And what happens? I mean, Gary, just looking at it from the economic perspective, we've been talking about how 0.3% cut off GDP if this lasts a week and every week thereafter.
No, look, as Jay said, we've been talking about this a lot. This is a much tougher scenario, and we haven't thrown the Middle East in there. We haven't thrown a major oil shock. We haven't thrown in there closing the Suez Canal and making shipping routes completely different. And we know the difference in shipping costs going around Africa than through the Mediterranean. These things are highly inflationary. This will be the real definition of transitory inflation. We'll get back to where we thought we were 4 years ago, of transitory inflation, a port strike, real disruption in the Middle East and shipping lanes and oil. This is all will have real short-term impact on the U.S. economy. And I think Chair Powell sort of started foreshadowing that last week, where he started talking about, a slower, more methodical move. Mm-hmm. I think he was foreshadowing exactly what he thought may be in the cards with the port strike. Right. Look, we got the 50 basis points, which we always thought was 25 at Jackson Hole and 25 at the meeting. That was the 50. Then we thought there'd be 25 more in the next two meetings. Look, I think there still is probably 25 more in the next two meetings, but it's not is positive. I'm not as positive today as I was last time I sat there because of the port strike and because of what's going on in the Middle East. These things can amplify very, very quickly.
I want to show you guys video, which you may have seen. This is the head of the Longshoremen Union, and this is what he had to say. Let's show you this video.
Who's going to win here in the long run? You're better off sitting down and let's get a contract and let's move on with this world. And in today's world, I'll cripple you. I will cripple you, and you have no idea what that means.
And then he goes on to suggest how he's going to cripple the country by all of the different various people who are going to lose their job. And I mean, by the way, he's a Trump supporter, known to be. I'm curious actually what your reaction is to that and what you think either former President Trump should be saying about this, or frankly, what you think Vice President Harris should be saying about this.
Let me jump in on this. Both sides are hoping to get the vote from labor, right?
Totally.
And one of the reasons is because the American people feel good about labor. We want people to have good jobs. What is one of the worst things that can happen when you're representing a constituency? That you go from having the American people behind you to losing the American people.
Right.
What I saw in that video was someone who's going to lose the American people if he's going to tell you, I'm going to jam you for money. Now, even worse, I'm going to jam you for money, and we want a prohibition on technology coming to ports in America. That's saying we want a job for life. We're going to hold you up.
I'm
and
curious
you know what?
what you think the political implication should be and what you think the leading politicians in this election should be saying as a result of this, because nobody wants to touch this.
Well,
you just touched.
I touched and I say you shouldn't be jamming the American people like this.
All right. I mean, look, I kind of agree with that. You probably shouldn't be jamming the American people like that. But I also think they're going to come to a conclusion soon, dude. This is not, I don't think this lasts multiple weeks. If it lasts for like a month, you take off 0.3% on GDP. That's not a good thing. I think it will get resolved by the end of the week. I hope. If it doesn't, we've got some issues. But I think they're probably in the negotiation room right now trying to resolve this. Here's a nice chart by Bank of America. So question to the chat, what is your tax loss candidate for this year? Bank of America put out this chart, and these are the number one stocks they see as tax loss harvesting candidates that are overweight and could see selling pressure in October. You've got Dollar Tree, Lululemon, Boeing, Dollar General, Schlumberger, CVS, Dayforce, Charter Communications, a bunch of names that have obviously not had the best earnings, obviously not had the strongest growth, and they could see further downside momentum given funds might tax loss harvest. So curious if you guys have any stocks that are losers for this year that would be the tax loss harvesting. Tesla says mine was SMCI. That's fair. SMCI, even though SMCI is still up 40% this year, even though it's down a lot from the top, but it's still up. Palantir 37.15. Palantir maintaining momentum. Hood, where is Hood? 37.18 now. Robinhood 23.07, not bad. Tesla still 243, not going below 240, which is nice, but it's down about 5%. Dell up a little bit, up 2.7. Snapchat's up a little bit. Palantir 37.17. Let me check the resistance on Palantir. I think 38 might be a little aggressive, but let's see if there's a shot. 37s on Palantir. 38 would require, there's about 8,000 shares at 38. Yeah, and the 38.50s, there's more selling pressure. There's not too many walls, though. There's a couple thousand shares every cent you go up from 37.20, so that'll probably be a little hard for Palantir, but there's not like massive walls kind of stopping it from getting to a certain level. Lulu, Ulta, Snowflake, Micron, Okta. Yeah, those are pretty good candidates as well. Those are not bad ones. Overall market is recovering a little bit. Where's S&P? Are we back to 569, 568? Down 0.07% on the day for the S&P. Again, dude, this market's, I mean, it's yesterday was a tough day, but it was a tough day driven by headlines, not much more than that. I know oil prices did go up, but I think the market's not as concerned about that, given they think it's going to come down, and it's still down relative to where it was a couple months ago, like aggressively down relative to where it was a couple months ago. So market's kind of factoring that in. And then we got Q3 earnings coming up, which I think is going to also be exciting and allow more growth for the broader economy. Check Joby. Where's Joby? Joby's up 21%. Why is Joby up 21%? Why is the Uber of the sky up 21%? Joby has partnered with Toyota, and they're going to invest $500 million into Joby. So Joby's market cap is $4.1 billion. They're up 21%. kind of looks like the market is giving them a 21% increase based on the $500 million that is going on their balance sheet from Toyota. Seems like that's kind of what the reason is for why it's going up right now. Interesting. Toyota and Joby will be making some jets. All right. Well, that's why that's up. Because I sold out of it yesterday. Oh, boy. All right. Let's listen to Larry Fink. He just did an interview with Bloomberg. It's about 10 minutes. So let's hear what he has to say and get his thoughts on what's going on in the broader economy. Or actually, it's 15 minutes. So we'll take a listen to this and see all the things our boy Fink has to say.
Anniversary. There was that prospectus of 1st of October, 1999, where BlackRock went public. So you're 25 years young.
It's great reading, wasn't it? Yeah, I mean, it's a really good day for us. It's our 25th anniversary. It's our day that we are closing GIP, and right around this time, we're going to have our 30th anniversary here in Germany. So it's a good day. I'm very pleased that our stock performance is up, close to 1,000% over that time. Markets.
But in all of this, Larry, where do you find the best deal? So, for example, in infrastructure, if you look at the closure of GIP, it's
Right.
today. This was
Right.
a massive play. What does it mean for integration? What does it mean for actually fundraising for infrastructure?
Well, GIP is in the midst of closing a $25 billion infrastructure product. The old BlackRock, our infra team is going to be raising another $10 billion. And then we announced a partnership with Microsoft, NVIDIA, and MGX. We have aspirations of raising $30 billion of equity, and then beyond that, more debt associated when we build out these AI data centers. So to me, this is the dawning of infrastructure. When I look around the world today, I see the inadequacies of infrastructure in almost every country. So we need to be decarbonizing, we need to be digitizing, we need to be moving forward, we need to be building out more and more. And I think this is one of the big issues. As I wrote in an editorial a few months back in the FT, and I spoke at the G7, I spoke about every economy needs to focus on growth. There's too much focus on, should we lower taxes, should we raise taxes? Not enough. How do we stimulate growth? And I think infrastructure is a major component of how we stimulate growth. And we don't, because of the breadth of the capital market, we don't have to rely on federal spending or state spending. There is enough capital in the private sector that will be able to fund these new projects. And so to me, this is the dawning of the new reality. That
Again, BlackRock did just start a fund with Microsoft for $30 billion, and that's probably just the beginning. It seems like if the emphasis is on growth and data centers is key to growth, a lot of jobs are going to be created building those data centers, and that might be where you start to see economies get more levels of employment.
That we're going to see broadening of public and private investing for infrastructure.
Is there a worry that it becomes quite political? So there are a couple of projects, Malaysia, Minnesota, that have been politicized. Is there a danger that infrastructure becomes a new ESG?
I see a very different outcome of that. This is helping government build out their infrastructure. There is no question. There may be one project or another project that may be politicized for one reason or another. But overall, in my conversations with politicians worldwide, they know they're in need of more private capital. So I dearly hope it's not politicized. If it's politicized in one location, it means money is going to seek another safer spot. And so you always have those type of risks, but capital is free moving, and capital is going to be seeking a safe, sound investment. We are the largest retirement manager in the world. Our job is to try to be finding investments on behalf of our retirees to find safe outcomes over a long period of time. So if there is an event that politicizes it, money will leave and money will seek another destination.
Where does the smart money stay away from? Is there anywhere in the markets where either something is priced to perfection or it's too risky? I know we talk about commercial real estate. For such a
Markets
long
move
time.
up and down. You always see, you mentioned like commercial real estate, you see too much money moving in one area, then it runs away from it. I think that's what markets do. We test the outer boundaries of pricing, and it becomes maybe a level in which that we don't find it's a great outcome for long-term investing, and then money moves to another destination. I think that's a natural movement. So I'm not worried about one area versus another area. The one other thing that I think everybody asks me is, is the market so pricey and yet all this geopolitical issues? I would argue today, because of the expansion of the global capital markets, we're diffusing more risk than ever. There is actually less systemic risk today than ever before. You mentioned private credit. Private credit is chiefly matching a liability and an asset together. It's not leveraging 8-to-1 like in a banking system. That's a good example of diffusing some systemic risk. But as more and more capital's broadening out how they invest, where they invest, that actually reduces less concentration in one area. Of course, we've seen, especially in cities, a decline in commercial real estate, but that's a natural process. But there's nothing systemic about it. You may lose money on one building, but you're moving into other destinations like data centers. You're moving into different cities that may have rising population growth. But you can't fight demographics. So there's some cities that are shrinking. Obviously, commercial real estate in those cities are going to be declining with that declining population.
Larry, what's your play in private credit? How much?
Okay, so we'll go back to that, but Fink pretty much saying the same stuff he's already said over the past couple of months around where the markets are. Pounds are at 37.17. Look at that, dude. 37.20 at the highs. Robinhood's still at $23. S&P just went green. We are 6 minutes past the 10:30 slam, and I think maybe the 10:30 slam only lasted for a couple minutes and we move on. But look at that, dude. Not bad, man. Where's the Qs? Are the Qs green? The Qs are green. The Qs are greeny green. What about NVIDIA? NVIDIA is also green by 1%. Meta is slightly down. Apple is probably down. Apple is, oh, wow. Apple's, it made a nice comeback. So it's still red, but it made a hell of a comeback, 223 to 225. Microsoft is slightly green. And then you got Tesla that still is not able to kind of get out of that 240 range, but at least it's not going below 240. Oklo is up today as well. This is the nuclear energy stock we talked about. Yeah, 10%. Look, energy is continuing to catch a bid, and nuclear in particular is catching that bid. I don't see any updates on Oklo today. It looks a little bit more technical. I don't see any like major headlines, but this one is getting some momentum here, up about 11%. NVIDIA as well, up about 0.92%. And the rest of the market kind of flat to red, basically, in terms of the other stocks. SMCI up about 1% as well. That's getting a little bit of momentum. JD's up, Baidu's up, all the Chinese stocks are up. I really did not expect the Chinese to stimulate towards the latter half of the year, dude. Like, I remember when I woke up and I saw that headline, I was like, what? China's stimulating? Came out of nowhere. But it provided such a strong macro landscape based on them stimulating. IBKR, Interactive Brokers, all-time high. Yeah, look, the brokerages have done well this year. Obviously, the market's done well, so that's great for the brokerages. So IBKR makes sense. 141, that it's at these levels as well. What happened to Humana? So I have an update on that. Let me play that real quick. Let's watch a little update on that. And then we'll keep going from there. It was about a lower Medicare rating that they got, which is what kind of got them hit. So let's take a listen to this right here.
Their stars. That's the quality ratings issued by the government on their plans. In a filing this morning, Humana said the star rating for one of its biggest Medicare Advantage plans fell a full point, from 4.5 to 3.5, based on, quote, narrowly missing higher industry cut points on a small number of measures, according to the company. Now, that cut below a 4-star rating means that Humana is going to miss out on a 5% bonus payment for higher quality. The Centers for Medicare and Medicaid, or CMS, looks at a number of things, like whether a plan is able to keep patients from having to go to the ER to be readmitted to the hospital after a initial stay, to develop those ratings. Now, Humana says it's in talk with CMS to try to appeal the designation, but if the rating stands, they could go to court, which a number of insurance did last year, like Elevance, and they ultimately won and did get back some of those
bonus points when the court decided that CMS did not calculate properly. But in the near term, as Medicare enrollees are starting to shop for plans, the lower star ratings could drive customers to other carriers, adding one more headwind for Humana in a very competitive market. United Health and CVS are higher this morning, looking more stable on ratings for 2025. But all of these insurers, guys, are grappling with maintaining margins at a time when seniors are racking up more and more medical costs.
Yeah.
It's an interesting one. I got to do some more research into a lot of these healthcare companies. United Healthcare is the one I know the most about, and I don't know that much about them. So Humana is another one that I've got to go a little bit deeper into. UNH is up today on that news, up about 1.1%. UNH stock this year as well had a pretty decent year. Well, I mean, it's up 10%. It is classified as a defensive, so you could argue 10 to 15% is not horrible. There is a dividend yield is there at 1.42% as well. Over the past 5 years, it's up 168%. So not too horrible of a name. Yes, we did look at Joby. Joby got an investment by Toyota for $500 million. That's why that one is up right now, up about 25%. Again, those things, those are not that exciting to me. Like we saw this with Rivian. Rivian was up 50% when they got a $5 billion investment from Volkswagen. But like those, like they've got to materialize into something. So Toyota putting $500 million into the company is not like, all right, time to go to the moon. It's like, all right, well, what is that $500 million going to do? So if you're in Joby and it's up 25%, congrats, that's awesome. But buying it because they got $500 million, I don't know if that's like a thesis to actually get into the name, especially if the name, falls back below $5 and then ends up being a penny stock. Where's Palantir? Robin at 22.88. Is Palantir still 37? Are we still holding 37? 37.04. I mean, dude, like at this point, it's just a game between 36 and 37 every other day, bouncing back and forth. And there's not enough momentum to take it into the 38 range yet, but there hasn't been enough momentum to take it down from 36. I think when's the last time we hit 35? Like, last time we hit 35 was September 17th, dude, or September 20th. And it was like for a couple of minutes and then it just rebounds. Like it's not as easily getting hit to the downside. Isn't it so crazy how everyone wants a dip now, but like for years we were just waiting for it to like move. And now everyone's like, man, I just wish I could buy more, but I need it to go down. It's just so crazy how things change, dude. So crazy how things change in the course of 12 months. And now we just gotta wait. I remember when I was at AIPCon and I was talking to one of the alumni there who has a crap ton of Palantir. He doesn't work there anymore, but he sells a ton of covered calls. And he was just like, dude, I don't get it. It's like, I thought I was pretty conservative with like my $30 covered calls, and the sucker's at 36. It won't go down. And I was like, what are you gonna do? He was like, I don't know. He's like, I gotta wait it out. But yeah, even he was annoyed. He was just like, can we get this thing to come down now? Like, what's going on here? ACHR is my slingshot. ACHR is also competing with Joby. ACHR, Archer Aviation. Yeah, that's up 7% today based on the Joby news, it seems. But again, both are still penny stocks. Both are like moonshots that hopefully do well. I've got to go through I never got into the financials of these two. Like, I'm not opposed to looking at them deeply, but I want to see if the financials are reasonable. Like, do they have a ton of debt? Are they kind of close to profitability? Because if you're going to buy a under $5 stock, there has to be some level of just hope there that doesn't make you think they're going to do some dilution or equity raise or anything like that. Kind of screw you over. Is Lilium still public? I forgot Lilium was public. Lilium's down 2% on the day. Lilium was a SPAC Palantir invested in a long time ago. They're also trying to do eVTOL jets, but Palantir dumped their shares like a year and a half ago, so they've been out of Lilium for a while. I think Lilium still uses Foundry, but yeah, this one was a SPAC as well. This one was at one point $15. Yeah, it's down a lot, dude. 74 cents. It's at 37 cents at one point though, so it's up double since then. But yeah, these companies, it's one of those things where you just hope something big happens and it plays out. But Palantir dumped their shares on this a while ago. Palantir right here at 37.10. Hood 22.89. Rocket Lab is slightly down on the day, but Rocket Lab doing a good job holding $9, dude. It's been a couple of days now holding 9, which is not too crazy. Netflix 711, Schwab Dividend Fund 84.58, SMCI 41. And then you got Qualcomm here at 168 on the day. Whereas Nvidia still 117, which is up about 75 bips. And then S&P is slightly green, but we are green on the day. When will end phase recover? Good question. Rate cuts should be the antidote, hopefully, to end phase. This has just not been a winner over the past couple of years. Solar obviously is important, but it's not as important as people thought it was. And rate cuts are beneficial because it'll be easier to finance the cost of solar in your house. But then you have to ask yourself, how many people really want to solar up their house? And I think it's just not as many as we thought. Now, granted, they were doing great until the rate cuts or the rate hikes. So the rate cuts should be a tailwind, but we only got 50. I mean, unless we get, another 125 over the next year, which we should be getting, I don't know if their demand necessarily picks up as much as we thought it would. Long term, I think end phase is good, but when I mean long term, I mean really long term. Like you're going to need a solar revolution to really see this take off. And if we get a nuclear revolution before a solar revolution, or both are happening at the same time, maybe the broader market appeal for solar isn't as exciting. Yeah, as Thomas says, won't be easier to finance if yields stay around 4%. And phase was just not the right play over the past year and a half based on rate hikes. Like the fundamental thesis was kind of good and the growth was good, but all of it was contingent on interest rates. And thank goodness Tesla is, it was contingent on interest rates, but Tesla is so much more than just a solar panel company. So there's a lot more going for it. And as a result, it can withstand the harsh rate environment, but end phase really needed low rates to benefit. So I don't know when it comes to solar in terms of when it's going to recover. I don't know. I feel like long term it'll be fine, but like you kind of just gotta have it and not care too much about it. Now maybe I'm wrong. Maybe end phase has crazy international growth, and those numbers make up for the low domestic growth, and like that's where end phase gets its momentum. But it's going to need some type of catalyst that's going to get the market excited about them. Where's Intel? Is Intel up today? Intel's up. Intel's trying to touch 23 as well, up 1.1%. Not too bad. Wigglefish says, I bought a house 2 years ago, thought hard about solar, but electricity prices have gone down now. In Ireland, a decent solar array takes about 7 to 8 years to pay for itself. Yeah, see, right there. Like, if you're a homeowner and you hear that it takes 7 years to pay for solar, then why the hell would you even waste your time, dude? I mean, like that's just so like boring. I mean, like and annoying. Like to have to negotiate with the solar company, get it all planned out. If it's gonna take 7 years to pay itself off. And look, oil prices coming down. That's also not. That could be another reason end phase is down, because that's great for electricity prices coming down when oil goes down, which is a disincentive to get solar. Jet says the AI revolution has proven the need for nuclear. Solar has lost its edge with nuclear. Yeah, I agree. I mean, I think more and more people we're seeing evidence care about nuclear, which nuclear is not a full winner yet. But if it becomes the winner, S&P right here, 568. Tesla recovering a little bit. It was down 6%. Now it's down 4.7. Then nuclear might end up being the one that catches more of a bid. No Stress says, I don't want that crap on my roof. When you have an issue with your shingles, you have to remove the panels, just the pain in the ass. Yeah, I think that's fair. I think that's a fair point. Amit, what's the thesis on Intel? The thesis on Intel is upgrades for PCs are going to require more AI chips, and the foundry business will require, or the American economy will require more chips being built inside of America, which is why their foundry business, which theoretically they have 15 of fabs, each one is worth 10 billion, I think, on estimates by Goldman Sachs. That's $150 billion market cap just in the foundry business alone. Intel right here is at 90 billion, 98 billion. So that's the thesis. The question is the execution towards that thesis. I mean, like if I had to sum up the thesis in one word, it's chips. And if I had to add two more words, in America, chips in America. The question is, how dedicated is Intel towards making sure they can realize that thesis, and that the government kind of wants to support that thesis as well. But I don't know. I don't think Intel, people are saying Intel is going bankrupt. I don't think it's going bankrupt. I think it'll take some time to recover, but I think Intel gets back to 40 over time. Like it's fair. It's like historical value has been 45 to 50. I think it gets back there over time. You just need a lot more chip demand. You need a lot more execution. I don't think it's the best place for your capital because there's an opportunity cost. Whereas, there's other, like I'd rather buy Palantir at 37.15 than Intel at 22.97. And I know Palantir's valuation at 37.15 is ridiculous, but I'd rather buy that than Intel, just because I know at least Palantir is executing. With Intel, I have no idea if they actually are going to meaningfully execute. But again, these are stocks for bottom feeders, and it's not always bad to be a bottom feeder. Like being a bottom feeder just means, hey, you find a company. I mean, Bill Ackman was a bottom feeder on Nike at 75, right? Being a bottom feeder just means like you're looking at a company that has been demolished by the market and you're trying to see, is there a thesis that you understand about the company that the market doesn't understand? By the way, that's pretty much what all of us did at Palantir when it was $7-8. We were bottom feeding on Palantir, even though we were technically DCAing on Palantir. At least I was DCAing. I wasn't sniping the bottom. But when a stock is down that much, it's a question of what can I figure out that the street doesn't know? And by the way, that's not easy to do. Like that's not an easy thing to do, to figure out something about a company that the market hasn't figured out. Because usually the market has figured out pretty much everything. Like on balance, the market has figured out everything. And so to find something in Palantir, when it was at $6, $7, $8 that it's going to be special, or for Robinhood, $22.98 right now, that, hey, at $7, $8, this thing is, the market doesn't fully understand it. It's just one of those things that you really have to have a lot of conviction in when you do it. So for Intel, I don't know the one thing that the market hasn't figured out about them that they're going to do that justifies the momentum, or at least the investment thesis here in it. Market didn't know anything about Meta when it was $80. Well, that's a great example. I mean, that was a mismatch in the market, right? And when no one wanted Meta at $80, including myself, even I was like, are these guys the next AOL? It's like even I was buying into a little bit of those headlines, which is stupid because I've always been bullish on Meta. But like this is the hard part about investing, dude. Like when things get really red and it shouldn't be red, like you have to go against the grain and actually make a decision. And like, that's what creates, in many times, generational wealth. I mean, like when you make a decision against the grain, I mean, like look at all the people that went long China over the past year. I don't know if they expect a China stimulus, but they thought the market didn't fully get the China thesis. And if you knew the stimulus was coming, I mean, you could have like offered me $1 million and I would not have been able to come up with an argument that China is going to re-stimulate by reducing the reserve ratio requirements and forcing banks to lower their mortgage rates by 30 bips on average. And that would cause a 45% move in China's large cap tech companies in the matter of 7 days. I could not have predicted that. But if somehow you were able to predict that was likely possible, or some version of that stimulus was possible, and you went deep into China, you're up a lot of money right now, especially if you went deep into calls on China and options. So really, it's about the asymmetry of information and being able to figure out something that the market hasn't figured out. Tesla deliveries came in, for those that are asking, they came in at 462,890. The street wanted 463,900, and so that's why Tesla's down right now. Energy came in a little bit lower than what it was last quarter, but still up about 73% year over year. All right, I think that's pretty much it, dude. Do we have anything else? I don't think we have any other crazy headlines. I'll be back today at 3:45 for the market close. No other headlines I'm looking at that are that interesting. Yeah, that's pretty much it. Major headlines were Tesla had their numbers. We'll see what happens with Tesla over the coming hours and see what happens from there. But so far now, I think it's about 10-10. And if 10-10 can deliver, we should be getting some more momentum for Tesla. All right, let's do word of the day, and then we will keep moving forward. This is an interesting one. Look at this. Chakoti, thank you for the 249 super chat. Could you explain your HUD thesis? So I'm going to give you a Twitter thread because I don't want to keep everyone hostage here. Let me give you a Twitter thread of mine on HUD, and you can read that because I've went in depth on it many, many times. But in general, to sum it up, it's wealth transfer. I think there's going to be a lot of wealth coming into Robinhood over the next few years, over the next decade. But that's not even the first part. Dude, there's like a crypto thesis. There's so many, but there's a user experience thesis. There's a lot of parts of it. So I'll send you a Twitter post right now and you can read that, and that'll help you go more in depth on it. Okay, word of the day is gavage. Gavage. This is an interesting word of the day.
Gavage.
Oh my God. Is it actually gavage, bro? No one looked at that and said gavage. No, like no one in the chat could look at that and tell me they said gavage versus gavage. And if you do, you're lying. Like you're legit lying. There's no one here that thought that was gavage. Is this like some French fucking LVMH brand gavage? No, it's gavage. There is no one that thought this was gavage. There's no one. Everyone's lying if they said it was gavage. It was gavage. All right, this word is forced feeding as by a flexible tube and a force pump. Researchers conducted a study to evaluate the psychological effects of gavage on poultry, measuring weight gain and overall health. The regulations surrounding gavage vary significantly between countries, with some banning the practice altogether. Forced feeding by a flexible tube. What an interesting word. All right, I don't even know how to use that in a sentence. That's it says force pump, so you could maybe relate that to the stock market, that certain stocks get a gavage, but it's gavage, bro. I'm saying gavage. Forget that. It is absolutely gavage. We are not saying gavage. Gavage. That sounds like it sounds like some premium brand that you pay for because it's a special brand over something else. I think it's garbage. Okay, so don't forget the X link. So how about this, Chakotay? I actually have a lot of tweets on this. I'll send you this right here. Or why don't you DM me on X, because that'll be a little bit easier for me to send it to you because I can't literally find it right now. I don't know if you saw the interview I did with Vlad, but if you haven't seen that one, I'll put that in the chat. That one you should definitely watch. I think that is an hour-long way to get the Robinhood thesis. But if you need more, just DM me on Twitter, and I'll send you a couple other posts. I've written like 15 to 20 posts over the past couple months. I have all of them saved, so I can just send you a bunch of those. But that link right there, you can watch that as well. All right, cool. I'm guessing it's a sexy time word. Oh my God, gavage, dude. That sounds ridiculous. Gavage. Stop trying to gavage me your leftovers. It's a ridiculous, ridiculous word. All right, that's it for me. I'll see you guys 3:45, and we'll keep going from there. Thank you, everybody. Have a good one. See you guys in a bit.